Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Welcome everyone. Good morning. Thanks everyone for joining. We're going to get started in a couple minutes. We're going to go from 7 a.m. until 10. Take it easy with the trading this week and next week. There's only just a few days left to trade. We're going into the holidays. Just please be careful. Manage your risk going into this end of the year. Let's have a good session, okay? We'll get started in just a couple minutes here.
Hey guys, good morning. Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey, welcome everyone. Good morning. Thanks everyone for joining. It is 7 a.m. Eastern. It is Monday, December 22. So thanks everyone for joining us. We appreciate you guys. Hopefully you had a great weekend and excited to get back onto the charts again. So trading this week is basically today and tomorrow. Markets will be closed early for Christmas Eve, Christmas Day, and the day after. If you are going to trade, just please look at the securities that you're trading. Look at the hours when they will be trading. You'll see that some days they're closing real early. Markets will be closing early. If you're trading futures, just get to know your security, what you're trading. And I just want to mention that this time, like Christmas, New Year's Day, New Year's Eve, Christmas Eve, the day after, volume is very, very suspect. So be careful because a lot of institutions and banks are not trading. Your broker might have a higher than normal spread. You might get slipped up on your trades. Rule of thumb is take it easy when you're trading at this time of the year. Everything will get back to normal starting in the first week of January. I know it's like an addiction for some people that they cannot take a day off. It's like the hardest thing to do is take a day off of trading, but you have to understand that Christmas and New Year's, it's best to take a day off, guys. Spend that time with your family, relax a couple days, and then we get back into this, okay? So we will obviously look at gold today. It did some spectacular things. It broke a new all-time high and it got up to 4,420. Wow, that 420 number. If you ask me, Ron, where would it go? I would probably say 4,420. Why? I don't know. I just like to smoke weed. It's a nice psychological number up there, and that's where it got up to. So we'll see what's happening. Right now, it's been a little bit of a pullback from that all-time high. It's consolidating. It could continue maybe to come up there and challenge that all-time high and make a new one, or it might just be making some lower highs right now and maybe pushing down. But we'll do a top-down analysis and we'll get into that. First thing is we got to go over this week's news. I just want to make sure you guys are aware of what's going on this week prior to us getting into the charts, okay? So quickly, on Forex Factory, today's news. The markets are obviously open today. Wall Street will open at 9:30 all day today, but there's no impact news. There was basically nothing coming out of Europe, nothing here, just some Canadian news. No news today, okay? So, but the markets are open. So if you are trading, there's going to be some volume to trade, just no news to maybe push anything. There's no catalyst to drive anything or no high impact news today, okay? Gold rises to record high on rate cut bets and geopolitical strife right now. There's a lot going on around the world right now, and gold is continuing to defy these odds and continue to make new all-time highs, which is it's nothing crazy. It's not a conspiracy theory. If you look around and you see everything going on around the world, gold is still driving. It's still a safe haven with uncertainty around the world and all the geopolitical tension there is. Gold is possibly going to continue to drive. And you can see there's healthy pullbacks being bought up, okay? Tomorrow, okay? Guys, tomorrow is like a tentative day for us. I will let you guys know later this evening. If I have a link available, it'll either be New York, like this time, it might be post New York, but I don't know exactly because we got a few things going on with the family and things like that. So I will let you guys know tomorrow, like later tonight, about tomorrow's session. Okay. Tomorrow there's also news, whether you're trading or you're taking a day off. Okay. So tomorrow's December 23. Markets are still open. You can see at 8:30 we do have some US news. Core durable goods, preliminary GDP price index, quarter over quarter coming out. You can see that they're releasing some data from October, okay? Because if you guys do remember, there was a government shutdown, and now they're releasing some folders and some numbers that were tentative or deleted during the government shutdown. So these are all coming out too. That can impact the volatility when they're releasing all of these folders at this time, okay? And then if you are trading, again, Wall Street market is open. Markets are open tomorrow, okay? And then this is when you should be now taking a day off. Wednesday this week in Europe, German bank holidays are closed. We got bank holidays in New Zealand and Australia. I personally, like if you are going to be trading, US banks are opened Christmas Eve. You can see here, unemployment claims will be released. You know, our Thursday unemployment claims, they're coming out a day earlier, will be released. Crude oil inventories are still being released at 10:30. Natural gas storage. That's if you're trading, guys. This is where kind of you got to wrap it up this day, Wednesday, if you're going to go into here. I won't be trading this day. Dave won't be here. You guys will be on your own here. This is when holidays are going to start here for us. And then Thursday, guys, obviously it is Christmas Day. Happy Christmas. Merry Christmas to those that celebrate. This is, you can see everything around the world is closed. Okay. This is a day off, guys. Please understand that. Okay. Stay out of the markets this day. Because you might go in here and just waste a day looking at charts for nothing, okay? Take a day off. And then the next day, Friday, again, it's Boxing Day. It's the day after Christmas. Banks are closed as well. You can jump in. Like you see here, U.S. banks are open. There will be some volume to trade, but it's going to be very, very suspect, okay? I would suggest, and this is a Friday, end of the year, end of the month, end of the week, take a day off, okay? Because you might do something silly and you're going to regret it. And then that's how you're going to start your new year trading. Okay. Believe me, this was a mistake I used to make back in the day and I don't want to make that again. Okay. So just basically today, tomorrow, a little bit on Wednesday, and that's it. That's all you got. And then if we do come back next week, again, pending whatever my wife is saying, whatever we're doing, she's the boss. I got to go with what she's doing. So Monday, December 29, again, if we are trading, it will be a Monday morning and maybe a Tuesday. And then that's it. Because then again, we stop because then we have New Year's Eve. You can see banks are closed. New Year's Day, obviously, take the day off. And then Friday, again, take a day off, end it off, and then we start Monday fresh, the new year, January 5th, okay? Earnings, you can see we have basically no earnings today in the morning. There's nothing after the close. Tomorrow morning, nothing. Just Tuesday after close, just two securities this entire week. Look, if you look on Wednesday, this is Wednesday, nothing. Thursday, nothing. Obviously, it's Christmas Day, markets are closed. So we have no earnings, nothing to really drive anything in the stock markets. That's another reason to maybe stay away from the markets. There is some news over here, okay? At Goldman Sachs and Citadel Securities, the Santa Rally has believers. Okay, so we did a blog article on the Santa Claus Rally, what that is. Get familiar with what it is and how it could impact the new year trading. Gold, silver near record highs as U.S. data support rate cut bets. This was produced 2 days ago, so we can see that gold has already broke all-time highs over here. So there is some news that was released 2 days ago, not updated here. Then we start to get the updates over here. And that's what we got going on news-wise. Let's just continue, guys. Guys, we do send out signals and trade ideas. Right now, again, we're taking a break from the signals and trade ideas until the new year. But in the new year, if you guys want some trade signals, trade ideas, some trade management, some help with the charts, with your Confluence, we do offer these here at SST. And this is a free blog available to everybody on YouTube. Thanks everyone for joining. There's 150 viewers on YouTube. If you guys can leave us a like, we do appreciate it. Subscribe to the channel if you haven't already. And there is the free Telegram. It's pinned at the top of YouTube for you guys. Here's the link to all of our live YouTube sessions. It's upcoming links and the actual link when we go live. This was, if you guys remember last Friday, there was something that was called quad witching or triple witching in the markets. So we did a little blog to let you guys know what that is exactly. Should be familiar with this because it does affect the markets and the volatility and volume in the markets, okay? And quad witching happens 4 times per year, and that blog breaks it down there. Yeah, guys, and just some really nice comments from a lot of snipers. This was one, guys, if you didn't read it, it was really, it was nice to read this. We got this sent to us in our Gmail. It was from, you guys can read the article, but we gave this husband over here, the wife messaged us, and we gave them a exclusive membership with us here at SST. To give back, and this was a beautiful message over here, and this is the reason why we do what we do, and we get a lot of these, so but this one really, you know, was worthwhile to show you guys how appreciative, you know, a trader's wife is, you know, looking out for her husband and how hard he's putting this together for the family. So we're blessed to be part of their journey, and hopefully we can help out in a positive way. Our website, guys, okay, lots of education. There's this new one right over here, the SST Psychology Mindset Coach, Coach Ronnie over here. So last week we did the Introduction to Trading Psychology. It was already uploaded to the website. And this Friday, I know it's the holidays, but maybe if you want something to watch over the holidays, part 2 will be coming out, Understanding the Role of Emotions in Trading, okay? So this will be a 25-part series on how to master your mindset and psychology in trading, which is probably the hardest thing to do and probably takes years and years and years to learn. The technicals, the fundamentals, the charting, that's the easy part. This is the difficult part of trading, is to control your psychology and emotions when you're in the markets. Right now, how to have a proper mindset trading these last few weeks. What is your plan? I have a plan. Do you guys have your plan set up? You know, this is what it is. I don't want to be guessing. Am I trading on Friday this week? You know, like I don't want to be guessing. You got to have a solid plan, okay? And then when we go over to the blogs, we had the SST market update for the members. Here's the quad witching. I just want to read it really fast. There was the Santa Claus rally that we had last week. Please read this, guys. But this one here too, I want you guys to get familiar with what is quad witching or triple witching, okay? So quad witching, quadruple witching, commonly referred to as quad witching, is an event in the financial markets that occurs only 4 times per year, okay? So that's, you know, like when we talk about FOMCs, the FOMC event happens 8 times per year. So you can tell when Powell is coming to the podium how significant those FOMC events are. But quad witching is also another very important time of the year, and it only happens 4 times per year. So next year, we're going to go through quad witching 4 times. What are the dates? They're on the 3rd Friday of March, June, September, and December, which we just had. This day is significant because it marks the simultaneous expiration of 4 different types of derivative contracts. So when you're trading options, these are the different type of options that you can trade. Number 1, you have stock index futures, contracts obligating the buyer to purchase or the seller to sell a stock index at a predetermined future date and price. Number 2, the other derivative is a stock index options. Option contracts on stock indexes allowing the holder to buy or sell the index at a specific strike price before expiry. Number 3, individual stock options. So you can have options on individual stocks, giving the holder the right to buy or sell a stock at a specified price within a certain period. So an individual stock option is like having a call or a put option on Apple, on Tesla, on Nvidia, on those individual stock options. You can do stock index options, stock index futures, and finally the fourth one is single stock futures. Futures contracts on individual stocks obligating the buyer to purchase or the seller to sell a specified stock at a predetermined future date. So this is kind of what quad witching is. Right over here, you got your stock options, stock index options, stock index future, single stock future. So they all expire on those 4 dates. And what is the importance for you and I, for traders or investors? Understanding quad witching is crucial for traders and investors due to its impact on market conditions and trading strategies. The number 1, there's an increased amount of volume on these days. Why? The simultaneous expiration of these contracts leads to a convergence of hedging activities and adjustments by traders managing their positions. This activity usually results in significantly increased trading volume. For example, if a large number of options are set to expire, traders might need to buy or sell shares to hedge their positions. There's going to be an increase in volatility, higher volatility. The need to close, roll over, because you can roll over your options into a new option. It's called the rollover feature. So there is traders that are rolling over their options into the new contracts. So the need to close, roll over, or adjust positions can lead to unpredictability in stock prices, contributing to market volatility. Sudden and large price movements can occur, creating both risks and opportunities for traders. So this chart over here is showing like price action, candlesticks going up, coming back down. But look at the volume bars below. Look at this bar, look at this bar, look at that bar, and the fourth bar. Look at the size of them compared to all of the other trading days on this chart. And those are the quad witching days that have the increased volume. So when you have increased volume, you have increased volatility, you have to make your necessary adjustments as a trader. And those happen on these quad witching days. So what are the effects on market dynamics? Order imbalances. As traders execute numerous transactions to align with their strategic needs, order imbalances may occur, leading to unusual price swings. Opportunities for arbitrage. During this time, discrepancies between futures options and underlying asset prices can offer arbitrage opportunities for skilled traders who can quickly identify and exploit these mispricings. Finally, there's portfolio rebalancing. Institutional investors may rebalance their portfolios on these days, either as part of a regular strategy cycles or due to the need to address portfolio shifts caused by expiring derivatives. And an example of like quad witching, what this is, consider a scenario where a trader holds call options on a major stock index set to expire on a quad witching day. If the index near the option's strike price, the trader may choose to exercise the option, impacting the index's value through buying pressure. So when you exercise an option, you're basically adding buying pressure. Conversely, market makers and other participants might engage in selling to hedge their risk. So you got to understand how the markets move two ways. And this can increase the volatility further. Finally, in conclusion, while quad witching can lead to heightened volume and volatility, presenting opportunities for profit, it also poses risks due to potential rapid and unpredictable market movements. Traders and investors need to be prepared for such events, adjusting their strategies accordingly to manage risk and capitalize on potential opportunities. Okay, so if you are now, at least you're familiar with the dates of when these events happen. And someone will say, Ron, this is really complicated. I don't understand this. Then okay, that's fine. If you don't understand this, I'm not saying you're going to get this right away. You got to read a little bit about, maybe some of you guys are not familiar with what our stock option index and options trading and things like that. That's fine. But at least you can pinpoint these dates. And when these dates come up on your calendar, this is when you got to exercise proper risk management, and then consider, maybe this is a day you might want to take off of trading. Why? Because it might be heightened volatility. You might not know what's going on this day, and you have no idea, and then you're high risk, high leveraging trading, and then you have a miserable day in the markets and you can't handle, and then you're going to say, what the hell is going on in the markets? What's going on? But that's why you have to inform and learn and educate on these days, right? So that's what this is. The more you know in the markets, the more powerful you are, the more knowledge you have, okay? I'm not saying you have to trade on these quad witching days, but at least you know what's going on now. You have a better understanding. Again, you're not going to become a pro understanding all this unless you do further education on yourself and understand what this is. But if you simply now know the dates, maybe take a day off. That's it. And you avoided the quad witching day, because it can have some crazy swings in the markets. And if you have no idea what's going on, you could possibly lose money, you could damage your accounts, you could revenge trade, you could get mad, and then you're gonna talk to your uncle, I was trading on this day and I blew up my account, and I'm gonna say, you know that you were trading on the third quad witching day of the year? It's one of the most difficult days to trade. And then you're gonna say, oh, I didn't know that. And I'm gonna say, well, you should have read our blog right over here, okay? So that's what's going on. Quad witching. All of these blogs are available over here, guys. Read this one too, because we're moving into the Santa Claus rally, so you guys know what that is, okay? And then finally, guys, we're getting now into it. Hit the like button, almost 200 viewers. Subscribe to the channel. We're kind of starting to plateau now at these highs, but this is not plateau. This is because we took days off on the weekend, okay? That's how this YouTube works. But let's see if we can get some subs up. Guys, we're going to help you master your mind in trading in 2026, and hopefully you can take trading to the next level. But that's up to you, okay? All you got to do is subscribe to the channel and like the channel and join us. Costs you nothing. It's free knowledge. Okay, now we're going to get onto the charts on gold, okay? I'm going to do a top-down analysis. I know some of you guys are excited. I can see already in the YouTube chat. Are we buying? Are we selling? I have no idea. You can see I'm just looking at the chart right now in the 5 minutes. I can see how they're moving, but that doesn't just mean I'm going to buy and sell right now, just because we got some excited people on YouTube. We have to do what's called a top-down analysis. I have to do it. I'm not saying you have to, but it's part of my daily routine as a trader. It's like if I trade without doing my daily top-down, I feel like I'm naked. You know, I feel like I'm running outside naked. I'm streaking in the streets. I have no clothes on and I'm just going out shopping and naked. It just doesn't seem right, you know? Hopefully none of you guys would do that. I hope none of you guys are going Christmas shopping butt naked at the grocery stores. If you are, or at the malls, there's something wrong with you. You're probably going to get a lot of looks. Probably people are going to be videotaping you. You might get security after you. But that's how I feel if I'm trading without doing a top-down analysis. So I don't want to just go naked in the markets, okay? We got to have some clothes on. We got to be respectable when we're trading, okay? Now, with that being said, I hope all of you guys have your clothes on in the Zoom. Good morning, Conrad, Ferdinand, welcome. Osi, Mohamed, welcome. Kira, good morning. Bradley, Agent Smith, welcome. Thank you, good morning. Congratulations on all your success, Bradley. Let's continue this in the new year, brother. I'm very, very, very proud of you. Good job. SSDN, welcome. Camille, welcome. Thank you guys. HP, clothes on. Good. Okay. So I got my clothes on. Hopefully you guys got your clothes on too. We don't want to scare anybody here. And everyone on YouTube, I hope you guys have your clothes on too, and we're not going naked in the markets. Thomas Jones, welcome. Thank you for being number one. Tony Gold, welcome. Sanity, good morning, brother. God loves your every much Navi. God loves you, Navi. Welcome. Welcome, guys. Doped Angel, welcome. Thank you, guys. Thanks, everyone, for joining. We appreciate all of you guys. Let's get into it, okay? So I'm doing my analysis now, top down. Hopefully, you guys already have your charts done and you guys are ready to go. Before I do this one right here, I just want to go back to, remember our swing trading, Okay, swing trading is ongoing. Is anyone in a swing buy going to the all-time high on gold? Look at it, okay? This is what we were doing. Remember 2 weeks ago, we did Monday, Tuesday, Wednesday, and we were following our swing analysis charts. This is the 4 hours of gold. Look, this was the first buy. There was the pullback. Now look, we had a breakout right there last Thursday. You see no volume closed above, back in the zone. There was the first 4-hour bar Friday at 9 a.m. that closed above. If you did some weekend homework, you possibly could be in a buy right now, holding all-time highs. Why? That 4-hour bar closed above this red zone. Do what we do here, red to green. Look at the inside bar, the Tetris piece on the 4-hour. When it opened the next one on Friday, it came up, but then back down. Look at it, right at 50%. Right at the green zone now. And then look at now how they opened up the market. Sunday, they gapped it up and just started pushing. And short wicks, there's the pop. If you wanted, you could be in a swing trade buy right now. Possibly maybe either bought down there, but I'm assuming maybe bought the break of the wick. Maybe your stop loss was, look, you could have zero drawdown. You could have zero drawdown, literally. You could have had your stop loss just below here. That's a pretty tight stop loss. You could have had your stop below the daily point of interest, the 50%, the yellow line. You could have had it below the entire zone. Whatever is your method of placing your stop loss or how much you're risking. This orange line, remember the orange line on my chart is Donald Trump's face. It's the all-time high. There it was, 4,382. And now follow the volume, the closing balance. Look at it. It broke. There's the new all-time high on that 4-hour candle. It got up to 4,385.86. And look at where it closed. Tell me, did it close above Donald Trump's face, orange line? Yes or no? It's not a trick question. The answer is yes. Yes, it did. There's the balance. There was the previous all-time high. Short wick. Look, it opened and it was bearish, bearish, bearish. Did it come all the way down into the point of control of that big body candle? No, it's a shallow pullback and just continue to drive with that momentum right at the all-time high, short wick. And the next 4-hour candle continued to create a new all-time high right there. Got up to 4,410. There was a little bit of a pullback right there. You could have cut that 4-hour candle in half right there and been waiting for a pullback. Again, short wick. Did it come into 50%? No, it continued to drive. The job of this candle, I know it's a 4-hour candle, but I explained this on the lower time frames. A candle has a job to do. This one did its job. Its job was to continue to fill that wick, which is the all-time high, and create a new high. So there's our new all-time high at 4,420. And look at now there's selling pressure. And even if we were to cut that last 4-hour candle, now you see it just drove right into like the halfway point and now it's consolidating. So if we get further pushed down, it might come back down. Again, you could be targeting that 4-hour candle right there, 4,390. And maybe the physical previous all-time high was resistance. Now it could be support. So even if you get a pullback coming all the way back down, you could literally look to continue to buy at the previous all-time high. If it doesn't hold, then 50% of this big body candle that created the big move, okay? So that could have been you could have had your swing trade done for this week and been enjoying now your Christmas holidays. You could have been packing it in. You don't have to come in and scalp the markets like we do. You see, guys, why swing trading can be very lucrative and it can be beneficial. But you got to learn, like this could be a 5-minute candle so that's why I love teaching on lower time frames, because when you understand price action, the language of trading, you just now have to decide what time frame works well with you and your style. If you're more of this type of trader, can sit back and wait and collect big pips, these are big pips. Newt, nice one. You caught most of it. 4358 all the way to 4392. Excellent, Newt. That's a big move, boss. Perfect. So yeah, and you see, guys, it's continuing to make higher highs, pulled back there, held the double bottom, came up. You see the resistance, couldn't break. So it just started trading, accumulating in that green zone. Then eventually the redistribution only has three directions, either up, either continue trading like here, or if it broke down, we would have been selling gold back down to December's low. But you see, it continued to drive with all of the geopolitical news around the world. The world is still crazy right now. So lots of investors are still flocking to the end of the year into gold. Will it sustain this and continue in 2026? Possibly, unless there's miracles out there and war can be solved overnight. But I don't think that's happening. It looks like war is intensifying all over, even in Venezuela right now. So, developing news, that's how markets move. Okay, so congrats to our swing traders out there. That's how you got to do it, right? You just got to place some alerts, wait for that volume to go there, just like 5-minute trading, and wait for your confirmations. That's it. Okay. Now, so I'm going to do a full top-down analysis. Let's start off on gold on the daily, right? Okay, so it looks like that 4-hour chart, remember, but this is now daily. Okay, so some key levels that we need to understand. Where was the previous all-time high? It was right there, remember? That was where I used to always have the orange line, and I said, guys, this is Donald Trump's face right here, the orange. It was 4382, 4381. It came right up there, October 17. It tried again October 20 over the weekend, and it tried again October 21, and that's where the sellers pushed it down. I had a physical zone at the all-time high and to those bodies. I've always had that, so I should always have it on my chart right now. So remember I said, guys, stretch this red zone into the future, red, 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 red. And then you see when we were trading in here, it came in there, back down, came in there, back down, came in there, back down. So it's still red. It came in there a little higher, but then went right back down. But you notice how sellers were pushing it down from the top, but they could not create any more like lower lows, really break it down or close with black volume, physically close below these bars. So I see equal bottom lows, tweezer bottom lows. I see higher lows. I see higher lows. So it's still trending up. And now you see, basically right now, today, ignited bullish bar breaking through all these, creating a new all-time high. And this is an impulse break, right? It's impulse. There's still 9.5 hours to go on this daily candle. I don't even know if it will close up here, to tell you the truth. It might come up here, create that new all-time high, and now get a wick and come all the way back down and close maybe right back in this zone in here. It could close up here and maybe push even higher, but now you can see we're transacting out of here. So this red zone, it's still technically red on the daily bar because I can't make it green until this daily bar physically closes. You guys understand that, right? Okay. I can only change the zone if I go to a specific time frame and volume has closed. I couldn't believe how many snipers did not know this concept. Okay, so when I do my analysis, it's according to the particular candle I'm on. I'm on the daily. This is a daily bar. It's just like if this was a 5-minute candle breaking through here. It has not closed yet. So for me to just make this a green zone, it doesn't go with what I do here. So this is still red on the daily, and it's telling me it's an impulse break. Okay, now this is no longer an all-time high. So you know how I use orange for all-time high? I'm going to make this a yellow line. It's now a point of interest. My new all-time high is right now on today's high. Right there. That's the new all-time high, 4,420. When it gets there, you should be smoking a joint when you're profiting up there, okay? Now, I know it's to go all the way down here makes no sense right now because gold's all the way up here. How the hell is it going to come all the way down here today? It's not the point. The point is when we find a supply zone, we should find where the demand zone is, support zone, or where the buyers are. They're right there. You can literally visually see it, okay? There's no debate here. The market came all the way down. There was a bottom. It came up. There's the neckline. It came back down there again. See the yellow line holding those bodies? That's the second bottom, double bottom. Double bottom traditionally has more volume. There it is. There's a fact of it. And it came in and it traded right into the point of control of this big bearish candle. And there were the sellers pushing it right back down. But you notice sellers did not push it all the way back down to the yellow line. So it produced higher lows into 50% point of control of this body. And that's what continued this wave up, where we're moving wave 1, pullback wave 2. Wave 3, pullback wave 4, and we're on the 5th wave right now, and we're doing the finishing move. This is kind of like the fatality continuing to drive. It could continue to drive up, but if we ever do come back down here, if gold ever does, that would be a nice buying opportunity right by above 3,900. And you can see that that big bar right there, you see that big blue bar? That is a physical daily ignited bullish bar. It looks exactly like today. Look at today. Today was a bullish ignited bar full of volume. On this day, it was the same bar. Look, on October 6th, it was a bullish ignited bar, but it actually physically closed up there, right? Maybe today's candle will physically close up there too. So then we can officially look at the zone. So you see where it opened, 50%. If you stretched it into the future, you can see it came right into that green zone, back up, came in there, back up, held. So this green zone is still holding gold. I guarantee you there's a shitload of pending orders waiting to come in there if gold ever pulls back down in there, okay? And now, is there a daily trend line? Yes, okay? You can clearly see the trend line right there, still bullish, okay? And now look, it's driving. So we are making that impulse break right now. And now, like, how high can we go? 420? Maybe, you know, I always say 425, okay? Always. But you see how close it would be if I put 425? So 420, 425 is a very, you know, psychological area in the depth of markets. I would go next one maybe to 450. Okay, so to 450, draw a yellow point of interest. That would be my next price discovery. If gold can continue to get up to 450, then I would do 475. Right? Another yellow point of interest. Those are like $25 moves. And then finally, the whole psychological number, the easy one is 4,500 on the dot. Okay. So that's good enough for me today. Like I want to see if it can, you know, just continue to break here. Okay. Now it's very bullish. One more thing is I just want to quickly show you guys how you can identify a specific point of control, because I get this question a million times a day. This candle is a great one to identify. This one is a good one. This one, maybe today's. If it closes strong, that one might be a fantastic one to find the point of control off of. But this big bearish one, the way how I find points of control is opening price to the closing price. The 0.5 is the point of interest right there. Cut it in half, yellow line. And then if I find the point of control, it's one ratio above and below the candle. So it's a bearish candle. It obviously has to be a red box. If you stretch it into the future, that's exactly where you can see that wave that was coming in, look at how it transacted right into that point of control and they pushed it down, okay? Did any blue volume close above? No. So sellers were still in control of that point of control of that big bearish candle. They're still offering. Continue into the future. You can see it traded in there again. Again, did any blue volume close above there? It's not a debate. The question is yes or no. It's not a trick question. It continued to push down. So that's where sellers were selling. That's where, you know, I was looking to see if gold would break down and start selling off. It didn't. Why? Because these buyers who bought on this day, Friday, November 28, you can see made a higher low. They're protecting the position. And then it continued to drive. And look at, they physically closed it right there. December 11. There's your closing bar. So this is no longer a bearish point of control with the closing volume on the specific time frame. If they confirm to you that it closes, you flip the zone to complement it. And you see now how this is now complementing this candle that closed. This is now a bullish zone. And you see we have not traded back into here. It came in right up. It didn't even touch it, went all this consolidation and continued to drive, okay? So that is the strong support below us. If sellers sell it down and break the trend line, if this zone doesn't hold up, then you see how much more it could come back down. But it's not just gonna, you know, break unless there's news. Right here was a pivot in the market, right there. You got to know where your pivots are as well, okay? Now, let's follow today's daily candle, okay? So look at it. It's bullish ignited, okay? So it opened very strong today. It even gapped up. The sellers didn't even have an opportunity to even push it down at the opening price. It's very strong from the open. That is our daily low where we opened, okay? So it's my purple line. That's representing where we opened, and it's a bullish ignited bar. Very strong. 4,337. That's what we need, to break through an all-time high, is a strong opening bar. And look at it. It's doing its job. It continued to fill this wick, backfill that wick. All of these wicks to the left, those three previous wicks that were at the all-time high back in October. It's filled all those and impulsively breaking out, right? That's as high as it got. That's the new all-time high. That's today's daily high as well. I'm going to keep it orange. And then there is a little bit of selling pressure right now, right there. So it might continue to sell back down. But what I would be looking at is the top of this red zone, the yellow line right there. 4381, 4385, that area. Why? Because that was the previous resistance of the all-time high. Now it could be turning into support if it pulls back there. We could be looking to buy at 4380 and see if we can continue to fill back up to the all-time high and get higher. Or that could be where now pending orders are accumulating in there, waiting to buy a pullback on gold, okay? So what I'm going to do now is I'm going to break today's daily candle and go into a 4-hour now, 4-hour analysis. Okay, I'm going to get off the daily. 4-hour now, when we go to the 4H, remember I showed you that swing trading chart? So here's the 4 hours coming up. That was the resistance, came back down. There was the M top double top on the 4 hours. As it broke down, right, it's got that big wick to fill. So you see that black candle didn't do its job. You know how you and I have a job every single day when we trade the markets? Monday morning, we're at work right now, okay? So we're working. This is work. For some traders, this is what I consider work. You know, when some traders say, Ron, do you go to work every day? I say, yes, I go to work every morning. This is going to work. We're clocking in. Hopefully we can clock out with our daily goal and go on with our day. Some traders, if you don't consider this work, I don't consider this like pleasure. I'm not on vacation right now. I'm working right now. So you got to be very serious with your trading, okay? And you got to understand that this is not a game. This might be what you do to earn income for your family, okay? So I don't play around. That's why I don't leave too much money on the table, because that money I leave on the table could literally be the groceries on the table that my family is eating that night, right? So I don't play games. I'm very disciplined with my trading. I have a different mindset than most traders. It took me years and years and years to develop this mindset that I have. It's very rare. I'm being honest. Not a lot of traders have my mindset. And I'm telling you, it took me years and years and years of learning how to get this mindset. That's why I pip and dip and I don't think about it. I get my money and I get out, right? Some traders, that's what they're struggling with. That's why I really want you guys to take advantage in 2026 of the mindset and the psychology course that I will be doing, because I know that that's where traders are lacking. Your technical skills, your price action skills, you identifying candles, you guys are doing it better than me. But I see a lot of you guys are still lacking on the psychology part, okay? So you see these bearish candles, they did not do their job. The job of this candle is to continue to fill the wicks and continue to go down. They failed, right? You can see they failed right there. They could produce higher lows. And then the buyers, when they see weakness, the other side will come in, right? It's just like sports. Did you get anyone watch the Jake Paul, Anthony Joshua fight on Friday night? It was a pretty good fight. You know, I thought AJ would knock him out in the first round. I don't, but you know, when you sense weakness, when AJ in the 6th round could sense he was tired, he went in for the kill shot, right? And just destroyed him. But he kind of, you know, a professional boxer gave him his jabs, you know, saw he was, you know, getting winded, saw he couldn't take it, timed it out perfectly. A lot of professionals said, why didn't he end it in the first round? Why didn't he do it in the first round? And Anthony Joshua just said, you know, like if you heard him in the post, he said, like, literally, I had to, you know, just see what was happening. I didn't know my opponent. This is the first time I've kind of fought someone who's not like a professional bodybuilder, you know, or a professional boxer. And I had to kind of feel him out, jab. Yes, it did take longer. He admitted that, but he got the job done. His job was to end that fight, whether it was in the first round or the last round. That was the job that he had to do. You know, a lot of people were looking to critique him and criticize him, and he was very professional. He just said, this is what it is, you know? So that's what trading is too. You know, you got to understand, you got to have a plan when you're going out there and you're trading. Okay. So this did not do its job. Then the buyers sense weakness, they jump in the markets. Again, right there was a pretty big bullish candle that broke out. Remember what I said last week? Wicks do damage, the body tell the story. Okay, so that wick did a lot of damage. That was a big body candle. That was a big blue candle, just like this one right here that broke through. But remember, it failed $7 short of the all-time high, and it failed miserably because it came back down there and closed below. So sellers were still in control. Gold could have broke down right there on Thursday and started to push down. But you see how the buyers are still hanging in there, creating these higher lows and holding it up. And then there's a Tetris piece right there. Friday, you had a 4-hour body close. There's your inside bar. Then this is where it all started. Sunday night opens are very powerful opens. A lot of you guys are starting to see Sunday nights. You're hitting your like weekly goals on Sunday nights. So hopefully this continues going into the new year. But is it always like this? No, but Sunday nights are providing great trading opportunities. So you see now, that's a big 4-hour bullish candle, and it's a significant one that closed above this entire red zone. Okay, so now if I'm basing off of the 4-hour candle, this one is showing me that it closed above the all-time high. So this now, that red zone, remember I didn't touch it on the daily because the daily candle is still building. But if I look on the 4 hours, I can now change that red zone to a green zone because the 4-hour volume did close above that zone right there. So there's the close. Now, if I'm looking at the point of interest or point of control of that 4-hour body, in case I want to pull back, I grab my Fibonacci tool, the opening balance, closing balance. I go to 0.5, same thing I do, but now I'm going to change the color to white. White represents either I'm using a 4-hour, a 2-hour, or an hourly candle. It's an H candle, hourly. It's not a daily and it's not a minute candle. And then if I find my point of control of that 4-hour candle, you see the 4-hour point of control is within the daily zone. So that kind of strengthens my analysis if I want to buy a pullback. So if gold on the 4-hour trades all the way, it's black, coming back down in there, right in there, 4,360 might be a great opportunity to buy out of there, right? We're trading near the all-time highs right now, but if it cools off and comes all the way down there, that could be a great opportunity to buy. Maybe there's a double bottom there that creates and then new all-time high, right? So at that white line, I'm going to right click it and add an alert there. Okay. You know, some days when I'm not trading or I'm not in the markets, it might come down there and give me an alert. That doesn't mean I just go in and buy blind. I watch what's happening there. Okay. But that's a good opportunity. Okay. Now let's see. Now just you normally learning your price action. That was a big ignited body, just like today's daily candle coming up. Look at where it closed. It closed right near the high, okay? Maybe some of you guys are going to be lighting some candles to relax over the holidays. Look at the wick when you're lighting it. Some candles have a large wick, some candles have a low wick, okay? I used to do the firecracker analogy. This is a short wick. If I was to light this, and this was like a firecracker, it would explode. It would explode really fast. Why? Because the wick is short. Look at this wick. If I was to light that wick with a lighter, it would just be, it would be on. It would be going on, like it would have, but look, it has to go all the way down there to the opening balance before it explodes. That's kind of like exhausted. You know that word exhausted? That's what that means. That's an exhausted wick. This wick is not really exhausted. It's ready to pop off. So right when the opening balance happened, it didn't pop it. You can see that there was a wick on it. There's a low wick. So it pulled back and it's a short. Did it come all the way back into the point of control? No. So the momentum was continuing into the new 4-hour candle, short wick. There's the pop. And there's that volume driving, where it just got up to the all-time high. Right there. That's our new all-time high. And you know when I always call bullshit out on candles and I call the brokers and market makers when they're doing shit like this? Look at where it closed to that 4-hour. Look at that wick. Okay. That's like 99.9% with that. So it did open and look, they popped that wick, but where's that big massive drive? It's not there, right? Okay. So you can see like the sellers now are holding it down. They're holding it down right there. Okay. I know it's a very, very tiny zone, but you can see that they're not allowing it any higher. Now we had that big 4-hour candle with all of that volume come down, come down, come down. That was the 4-hour low right there. And then it closed right there. So now what I want to do with this big 4-hour candle is find its point of control. Grab my Fibonacci, opening balance, closing balance. Where's 50%? There it is. I'm going to use a white line again because I'm working the 4-hour. If I find the 4-hour point of control of that big candle that just closed, it's right there, right? Okay, so I can see how low we came. We came now tapped right into it. Did we come at 50%? No. So it closed right there. And then now look at my new 4-hour candle that just opened with 2 hours and 15 minutes go. So it just opened. It was initially bearish, bearish, bearish. So that's kind of like my hourly lows. Okay. So this one right here inside the green box, I know that that's 50%. It's at a nice whole psychological number 2, 4402, 4400. Okay. Now if I just locate the hourly lows right there, 4406, wick and a wick. They look equal. So you see how the buyers are holding it from breaking it down further. So they're coming right back in. They flipped the candle. They came up. That's my hourly high. And you can see it's just kind of right below 50% if I was to cut that bearish candle in half. Okay. So this is now where my hourly volume is now consolidating inside here. Okay. Yes, it could definitely continue to go back up. But it could also continue to go back down, okay? So we got a little bit of indecision now on our 4-hour candle. There might be some consolidation. So we could be flagging as well, right? This entire zone now could be the flag right here. And bullish flags have a high probability of continuing to break out for new highs. In this situation, if this 4-hour candle continues to build, we might break out for a new all-time high, okay? But I now want to justify whether this area is the neckline or if the true neckline of this move is down in here, the previous break, the all-time high. So you know how we're up here now? Like, is it going to continue just to stay in here and then go for a new all-time high? Will it come back up? Will it be a double top at that all-time high now, the new one? And then this, either this zone, is this going to be the neckline or is the big neckline going to be down in here? Okay, so far it's flagging in this location. And I don't want to now just sit on the 4-hour candles. Again, I showed you how a swing trading chart works. I'm not swing trading. Now I want to dissect. I want to go from 4-hour to hourly. Now I want to see what the hell's been going on specifically. What hour caused this move? I can see right there, 6 p.m. Sunday. I know this is the daily opening candle. So maybe there was some shit that happened on the weekend. Gold broke out bullish. Look at same thing with the hourly candles. That's an ignited bar. It closed 99% near the high. Cut it in half. Find the point of control. This bar is very important. Look at all one blue bar on the hourly. It engulfed this one, this one, this one, this one. So when Friday was closing, 1 p.m., 2 p.m., 3 p.m., 4 p.m., one bar engulfed 4 hours. It's like Pac-Man. When you play the game Pac-Man, these are like those pellets. One block ate 4 pellets. That's telling me that's very engulfing. I have to analyze this candle. It's an important one. But look, it didn't. If you were waiting patiently to get a pullback in there, market didn't come in there. You got to understand how candles open. This is where you're taking your trading price action skills to the next level. You have to understand the language of price action. Okay, I'm telling this for real, guys. When you learn the language of a candle, you'll know exactly what you're looking for. And then when you don't get your pullbacks, you'll know why you never got your pullback. You'll look at this candle and say, shit, it was an ignited bar. I had to make a decision at that moment in time. And I did. And if you didn't, you can't now just continue to just FOMO. You got to understand that there's a shit ton of pending buyers still waiting to get filled down here. It has not came down there yet. Place an alert there and wait patiently. That's what I do. Okay. It's not a secret what I do here. Okay. This candle opened. Now you judge the size of the wick. This is again, firecracker approach on the 1 hour. Okay. We showed you what the daily looked like, the 4 hour, now the hourly. I'm telling you, it's the same shit over and over and over. If you're an hourly trader, this is what you got to know to look for. Short wick. It opened ignited right there. You could have been in an hourly buy at 7 p.m. and next one, look, went up to the high, closed. If you cut it in half right there, look at the pullback, came to the halfway point, buyers were there, and then they continue push, and the job of the candle is to break for a new high perfectly. So all of these candles our continued push up have not broke below 50% of this one, have not broke below 50% of that one, not that one. That was a big bullish candle, but they returned it back down with that rejection. And as soon as they opened up, look, it was black, but look, it didn't even do its job to fill that previous wick. Buyers stepped back in when this was at 1 a.m. Eastern last night. Okay, look at that's when it broke all the way out for the new all-time high. And there's 2 a.m. pre-London. Here's London, the black candle. And now we're just, look at consolidating on the hourly. Blue, black, blue, black, blue. Just holding. We're holding at that white line, hourly 4-hour support. There's that cut in half of that zone. And now it's building right back up. So you see this hourly white line for 413. I see an impulse back down. Impulse, it created the high and back down. So again, we've got now 10 minutes to go on this hourly candle. Will it close with blue volume above this white line, or are sellers going to push it right back down? Because are we going to buy just on impulse, or are we waiting for physical volume to close? Okay, so on the hourly, you see it pulled back. Now it's trying to build back its way back up. Okay, so what I do now is I go right into the 5 minutes. So these are the 5-minute candles. Again, 5-minute candles, they do their own thing too. You know, this one closed right at the high with no wick. Look how the next candle opened, just flashed black for a second, broke, and then drove. Okay, since then, we've been coming down. That was the all-time high. What time was it? 2 a.m. Eastern exactly. So that's pre-London. Then it came down. It found a pivot right there on the 5 minutes. It came back up. But notice their lower highs. Why? Because it traded into 50% of that black candle right there, right? Why is this candle important? Because it engulfed that previous one. So you see there, it came in a little higher, a little bit above, a little bit below is the point of control. And there it is, continue push back down. Sellers brought it down. That's where it tagged the hourly support in that green box. The buyers were there pushing it right back up. But you see, it didn't really do anything. Came here, just consolidated. One more push up. There was a nice bullish push. Did it come back in and test that red line? No. Lower high, continue push down. Look at the sellers right there. They pushed it all the way down. Big wick return coming back up. Again, they pushed it right back down there. It came back up, but you see they're struggling right there now. It came back down. You see it's not breaking there. So when we see a black candle physically close below there, then we might get an additional selling push down, but we're trading in that big green zone. Right now, they brought it right back up. Okay, so this is the white line where I have not seen a 5-minute candle close above here yet. It's been a while. Okay, so let's see now. This candle's closing in 3 minutes. We're moving into 8 a.m. in the next 7-8 minutes. And maybe we wait for the new hourly, okay? Now I'm just going to add the daily bar beside us. So we understand there's our daily bar on gold. So you remember the opening price was bullish ignited and drove and drove and drove and drove. There was the all-time high right there at 2 a.m. And this little bit of pressure we have pushing down is just representing today's daily wick, which could easily fill and go for a new all-time high. Okay, and you can see the whole story of when it started right there. When it all started, and we really have not had a significant pullback yet. Okay, so it's still very bullish. Let's add some EMAs. EMA 9 is the green line. We are above it. EMA 200 is all the way right over here. So you see we have not even came in. We've diverged away significantly from the 200, and this is where you get that big volume. You know, sometimes we come on these calls and the 9 and the 200 are trading like right on top of each other, and then it's sideways, it's choppy. But you see now it's diverged away, okay? I'm just going to check my spreads right now. I have a rather high spread on gold right now, 1.5. Normally I like trading it where it's 0.5 or 0.4. Holy, it just jumped from 1.5 to 2.5, okay? So there's lots of volatility in the markets right now. Andrew, enjoy your holidays. We'll see you next year. Yep, enjoy your holidays. Thanks for joining us this year. Broker I'm using, Fusion Markets. Yeah, it's a zero account, raw account. It's fixed commissions and the spreads. Sean, I never read your comment. I'm sorry. It's a lot of comments. What's your comment, Sean? If you put it in the chat right now, I'm looking. Sean, I'm scrolling up to see your comment. I don't see it. Did you put a comment? You have a raw account now. It's at 0.6. Yeah, now it's at 0.6 for me too. But it's fluctuating a lot. Okay. Let's 7:55. So we're 5 minutes away from a new hourly candle opening. Okay. So that 5-minute candle verified that we closed above this resistance. So you see, if it pulls back to the white line, you see the white line cuts that candle in half, right? So will that white line, which was resistance in the past, with that 5-minute candle closing above now, will it be support going forward? Okay. So it has not pulled back to that white line as of yet. Okay. So maybe it will pull back at 8 a.m. Maybe it won't pull back. Maybe it will just continue driving. Okay. So you got to understand, you could buy this candle if you want right now, but you're buying with no pullback at this area. Okay. So this is the first candle in a long time that's closed above. So we've had no retest or confirmation that it will come back here. So you either got to wait here for a pullback. Okay. I'm waiting. Reason being, because we're going into 8 a.m. in the next 3.5 minutes. Okay. So sometimes when you take a trade at this time, a new hourly candle opens and it could be like opposite direction or momentum can change. Okay. It's happened to me a lot of times. So that's why when I know that I'm looking for a trade and it's just a couple minutes away from a new hourly candle, a new 4-hour candle, or like some news, this is where I hold off. I know it looks like a trade to take a buy, but sometimes holding off and not worrying about what could have or should have happened. I know that that's a mindset thing that a lot of traders cannot overcome, is they cannot believe that I'm not in a buy right now because it closed, it opened, and I'm not in a buy. But I also look at the time, guys. Okay. If this was, let's say it was 7:18, 7:15 going in and it's 7:18 now, maybe I would entertain because I know that I'm still 12 minutes away from a new 30-minute candle. But I've been burned so many times buying or selling into a new hour, and I don't want to go through that. Okay. So you learn from your mistakes. Hopefully that's what we're doing as traders, is learning from mistakes. That's why you should be studying your journal. And if you don't understand this concept, like to patiently wait for a pullback, then I can tell that you have a lot to learn in trading. Honestly, I'm not saying that to be rude, but I'm saying that to be honest. If you don't understand the concept of waiting for a pullback and to understand that it takes a while to get a pullback, then you're lacking patience, you're lacking the discipline. And I know that you've got some learning to do. And then someone will say, well, Ron, you missed out. And then what I say is I don't give a shit, right? I don't care. I miss out on a lot of trades. I'm a scalper. I scalp 1-minute candles, but I know I still have to be patient and disciplined because I know I might eventually get a pullback. It might be a pullback I'm buying with bigger buyers. I'm buying with bigger volume. I'm buying with bigger pending orders, and I might get filled at that location when I'm looking for, and it might just fill and go directly right into profit, and I can avoid drawdown. Okay. I have a disciplined trading style every single day. I don't guess today I'm going to do this, tomorrow I'm going to do that, next week I'm going to do this, and then the following week I'm going to do that. I trade the same routine every day for the last 20 years. That's what keeps me consistent. It keeps me compounding my account. It keeps me emotionally looking for the same shit every single day. And I don't have to answer to anybody. You know what I mean? When I have to make excuses or tell people why I justify this, you do what you want to do, right? This works for me. Every style for every trader is unique and has to be complementing your style of trading. Do you have copy trading? You could literally have copied me the last 6 years on YouTube. We're doing live trading here. And guys, to go over copy trading, like for me to just, you copy my trades when I don't like that. To me, it's a lazy approach. I have no respect for traders that just want to copy other traders. To me, like, it's just personal thing. I have no respect for that. I have never once in my life ever copied another trader. I've always wanted to learn how to trade myself so I could do this the rest of my life. I've never respected anyone that just copies others. All the hard work I did last 20 years, and for someone just to like kind of just copy and I do all the work, it's not going to happen, guys. I have zero respect for those individuals. That's just how I am. But if you were literally on this channel, yeah, you could copy the trades that we do. Some hit profit, some hit losses, some are break even. And here's 8 a.m. opening up, bullish ignited, short wick popping. Holy shit, okay, new all-time high. Do I want to jump in right now and just buy the high? Do I have FOMO? Am I fear of missing out? No, I have no fear of missing out from buying this. I'm waiting at this white line. If you're in a buy, fantastic. Great job, but you got to do something up there because that's the all-time high. So it came right in there, big rejection. And you guys got to overcome this. Like, I know a lot of you guys are saying, well, Ron, why didn't you buy this candle? Why didn't you buy that one? Why didn't you buy that one? Okay, let's say I did. Let's say I bought that one and this wasn't the outcome. Okay, what happens if I bought that candle and then it just went up a little bit and then 8 a.m. opening was black, 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 and I'm still in the trade on a buy and it closed below there and now it comes back up. I'm in drawdown and it retests that and all of a sudden it's trading down there. Okay, what would you guys be saying to me then? You guys would probably say, Ron, why the hell did you buy that? Why didn't you wait for the pullback? And I would have said, yeah, you guys are right. I went in on, So I don't make excuses when I trade, okay? That's what I see today. A lot of traders make excuses. I don't. Okay, if you were in a buy, did you do anything at the all-time high? That's another thing. Do you have a plan or are we just guessing what we're doing every day? So it drove right into there. Did you cash out? Probably not because, you probably got greedy and you want more, okay? But that's now the second top up there. And look at that huge, excuse my language, guys. That's a big fuck you candle right now, okay? That's what that is. Excuse my French Canadian, but that's what that is. It told all those buyers up there, F you, and they've reversed it back down. But this candle is closing in 2 minutes, so it could come right back up. Until this candle closes, I don't know where and how it will close. But if it comes all the way back there and it's a shooting star candle, next one will possibly come back up blue, but it's got a huge wick to fill. It's not those short wicks. So then I can see that sellers might continue pushing it down. And if I'm looking to buy right there, it will probably push down right into there. But coming down with all this volume, it might not even be a good opportunity to buy that white line because sellers might even push it down further. So then this looks like a good solid area to entertain buys because look at that wick, look at that wick, look at that wick, look at that wick. Everything was created down here, okay? So this might be like a feeler opportunity here at this location. If it gets down there, I don't know. I could even maybe look to sell with this momentum coming down. But let's see where it will close. Remember, there's levels to this game. So you remember that red cut line was 50% of that, had a wick and a wick. Look at now, it's got a bigger wick, but that volume may close above that red line. So it could momentarily make that red line resistance to support, to continue to support the bullish move, climbing up that wick. I'll tell you guys a secret in trading, okay? Keep this between us. When you level up your mind and your psychology in trading, you're going to become a pro. I'm telling you guys. Trading is basically your mindset every single day. You're talking yourself into taking trades. You're talking yourself into waiting. You're talking yourself into, you're basically, it's you against yourself every single day, okay? And when you can master that, then the technicals are easy. The technicals are very easy because the candles will repeat themselves every single day. You'll understand when what a bullish ignited candle is. You'll understand what a rejection is. Okay, so you can see it got rejected, but there's still some bullish volume, and the bullish volume did technically close above that red line. So that red line is still continue to be support. Maybe if it comes back down, maybe hold there to continue to build up here. Okay. Okay, is anyone in a buy? Is anyone in a sell? I'm not in a trade currently myself, but I'm just waiting now. Okay, so there was that rejection, and you see how the momentum is continuing into the next candle off of that rejection. Okay, will this be a bearish engulfing bar, engulf this? Will it just come down, get a higher low wick, and continue to trade back up? Okay, we're trading now on the 5 minutes at the second top of the all-time high. Okay, so it came down black, got a wick, higher low, coming back up. Okay, so buyers are still here. They're still in control. See, when it came down, that was a big black candle, but it's still holding a higher low, now coming back up. But this has a big wick to fill. Okay, so that's a long wick. It's not a short one. So even the buyers are asking to trade up here. It could continue to go down and be a lower high. So it flipped now. It's a nice bullish candle, still driving. Does it have enough volume to continue to ask and trade at the new all-time high? Possibly. So nothing has really broke down. Buyers are still in full control. And there's nothing wrong with waiting for this candle to also close if you're not in a trade. Okay, look at that. So these buyers are still asking. Okay, so all it has to do is just create above that wick, and then we have a new all-time high. Okay, and if the volume closes on the 5 minutes above this red zone, I'm going to flip it green, and we could still have continuation going up bullish. So if you're looking to sell, you got to kind of be careful still. I'm still waiting. Will it consolidate inside here? Okay, so you see it came up. It did not take out that wick, so there is technically a lower high. It came down, but it's still filling and could continue to drive out of here and possibly also close above here. There it is. So it's still bullish, breaking out. So wow, strong, strong move. Unbelievable. Okay, so that's a new high that broke out, new all-time high. Now in 1 minute, will that blue volume close above this red zone? Because that will turn green momentarily on these 5 minutes. If it pulls back, it could continue to drive. We're trading at the highest point of today's daily candle, new all-time high. Sellers are getting, pushed into drawdown here. And I was still waiting, to buy here at the white line. It didn't come down there to me, okay? So I can continue to wait there. And this area is probably strengthening, getting stronger, more pending orders in that location. So, I'm waiting for a pullback, maybe to buy in this location if it comes down. Now say about the FU candle to the sellers. Yeah, I can say something about that. It was developing as an FU candle, Beirut, but you got to understand what I was saying was it was coming down there, and a candle to be officially an FU candle has to close as a shooting star. It can be a bearish pin bar, but that's still not as strong as a, but you see when it was coming down where it was FU and then it closed back above. Remember what I said, that closing balance, that volume closed above that red line. It made that resistance into support. So technically, as the candle was coming down, sellers were in control, but the closing price negated that. Okay, you guys I know you guys are trying to catch me with a aha moment or this or that, but I read price action very well, okay? So that's why you got to understand, you got to continue to follow the volume all the way into the close. I've seen bullish ignited candles open bullish ignited, and in the first 2 minutes, they're very bullish, but then the last 3 minutes, sellers take over and close it below their opening balance. Then what are you going to say, right? You got to go to the closing balance, right? I know you guys always want to try and get me. You're not going to get your unk like that. Sorry. Unk's been in the game for a long time. I'm that OG Unk, okay? That just smokes weed in the basement and studies candlesticks. So if you think you're going to get Unk caught slipping, you're not. Wait for candles to close. Look at this. And this is bullish ignited, short wick breaking out. I'm not in a buy. I would love to be in a buy right now. I would love to be. But I feel like I've already missed out on the run, right? So again, this was what I used to do, was just buy because I got to get in. It's going to go higher. But I could wait for a pullback back down into this location, in this location, okay? Is it going to go up forever? Maybe. But what am I supposed to do? I'm just going to chase it just to impress you guys on YouTube? I don't really care about you guys on YouTube, to tell you the truth. A lot of you guys are strangers. Do you guys care if I lose money? Probably not. So, I don't really care. I love you guys, but I'm telling you the honest truth. A lot of you guys are strangers and I don't really give a shit about you guys, right? I only care for people who I actually meet in real life. I have a connection with them, but I'm just saying that, guys. I love you guys on YouTube. But a lot of you guys do talk a lot of shit. A lot of you guys do talk a lot of shit. For someone that's giving free game, you guys talk a lot of shit out there. And keep following what's going on with the Japanese yen and the Bank of Japan. They've increased interest rates 0.75. They're dumping U.S. Treasuries. China's dumping U.S. Treasuries. They're forcing the U.S. to buy their own treasuries. First time in a lot of years that countries are starting to do this. How does it affect the dollar agent? If there's no demand for buying that when they're selling the treasuries, then the dollar will go down. So the U.S. now is forced to buy back their own dollars. Traditionally, they weren't doing that because other countries around the world were buying those treasuries as a safe haven around the world because the dollar was the strongest currency, still is, but you can see that countries are starting to lose faith on it. Okay, now we're at like a psychological level, 4,400 and 26, 25 level. Okay, so now things are going to start to get interesting here on the 5 minutes. And if you guys use this really silly indicator, the RSI indicator on the 5 minutes, it's showing us it's really overbought. It's at almost 80, okay? It's still going up. So I'm still waiting for a decent pullback. And yes, yeah, thanks for reminding me. We do have the comex market opening up in 5 minutes as well. Okay, so at 8:20 a.m. Eastern, the commodities exchange is opening up. So will it continue to take gold further to new all-time highs, or are we going to get a pullback leg coming down? Okay, so if you're in buys, you should be now considering a plan, because we're going into now comex. Okay, it's a new exchange opening up specifically for gold, and either, if you're in a buy, I would be trailing it behind. I would definitely be maybe having a stop loss at a break even. Okay, that's how you can negate your risk management. You might want to have a trailing stop loss in case it comes down. You lock in some profit, right? But if you don't, you know, some traders have no plan, and trade how you want to trade. Is like, I'm just trying to give you some tips, but I don't want to take you out of your trading style. That's not what I'm here to do. Just to remind you, definitely on a play like that, you should be at least at a break even. You should have zero risk in that. It's a big move. All time frames. Go back to the daily. Okay. So let's just go back. Look at the daily candle. Remember, it opened bullish ignited right from the opening. We broke through the new all-time. This was the previous all-time high, 4,381. It's trading right at the all-time high right now, at the highest point of the candle. 4-hour volume is, look at the 4-hour, like kind of continuing that Tetris piece, continue to play. So this 4-hour bar is going to close in 1 hour and 43 minutes. On the hourly, we have that hourly candle that opened and starting to break out, still in that bull flag, continuing to make highs. We're bullish, even on the 15 minutes. The 15 minutes kind of coiled up in here and continue to push out. I was looking for that close. Continuing to drive here. And on the 5 minutes, now we found a top so far, and we're going into comex in 2.5 minutes, okay? It's not easy to trade at all-time highs, okay? I will admit that. It's difficult trading at all-time highs too, on any security. Does anyone have any plans for the Christmas break, for the holidays? Anyone doing anything exciting that they want to share with us? Cracking beer and chill? Nice. Why do people keep shorting gold? Because it's overbought. It's overbought. And that's why they're shorting it, right? But overbought doesn't mean just give you a right to start selling. Unless you have like some counter trading rules. But like, I don't see sellers, you know, they came down, but they're all higher lows. I haven't seen them basically engulf anything. Maybe this candle might be the first one, but we're going right into comex. You realize any asset can stay overbought for a long time? Yes, I do understand that. I've traded gold pretty much all my life. It was overbought in the mid 2000s for almost a year, where the weekly RSI was above 70 for almost a year. I'm very familiar with how gold trades, guys. It's not my first day trading. If you're talking to me or you're talking to someone else, Damien, on the chat, but I know how gold trades. I don't know if you're talking to me or you're talking to the other person. A lot of retail traders use that RSI indicator, and anytime it gets overbought, it's like a signal to sell. But I always say you got to be cautious, because anything above 70 to 100, yes, it's in an overbought territory, but it's also very strong territory, strength. That's where those buyers come in, because they know that they can squeeze short sellers. Same with when it's oversold, in an oversold condition. If a security starts selling and is below 30, then traditionally retail traders just buy because it's oversold. But it could go even further, because then sellers, bigger sellers, can come in and offer down there and continue taking it lower. Okay, so now this is 820. We're in a exchange open. Okay, so we've got that red line is the all-time high now, and I'm just bringing it down to this zone to see if we get some consolidation inside here. Will it flag up here? Will it continue to break out even further? Or are we going to get a push down? I'd like to see maybe if it comes down here, breaks maybe here, and then come back up. Maybe I can buy, if there's a nice little pullback, I'll buy that next leg coming back up. Okay, so this is a pullback currently. Will it go down further down into here? Is it just going to hang out here? We haven't had a significant pullback. Guys, thank you. Almost 500 viewers today. Wow, awesome. I appreciate everyone that's joined us for the entire year of 2025. I'm telling you guys, stick with this channel, hit the subscribe button, because 2026 is going to be a very entertaining year for all of us here. We're going to have a lot of new things we're going to do here at SST. So you're really, really going to enjoy it, guys. You're going to learn a lot. And we're going to continue giving back, guys. Okay, so we are getting a little bit of a pullback. Okay, now we got to figure out where is the neckline. Okay, is it this green box? Is it going to be this red line? Will the sellers have a deeper push down into there? Obviously, it would be nice to buy it in down there. That's a deeper discounted area. It's more hourly. The white line is there, but it might not come all the way down there. Like it might just stop right here or here and then go back up. Okay, so I got to follow this selling volume. It's got 2 more minutes to go. Will it close below this zone? Will it just come down, get a wick, and turn back up? Okay, so right now it's selling off. Okay, it's not market crash. It's a nice pullback from that all-time high. Comex now, like 820, is, you can see, that's why I was saying to buyers, if you're in a buy, you should be either doing something, but if you didn't, it might be just a shallow pullback right here and continue driving back up. Me not being in a trade, I'm going to wait and see where this thing can close. Because the volume is still near the lowest point. Okay, there it came down. This green line is that 9 EMA. I know some of you guys do use this. This red line was previous cutting that big bearish candle in half. There was where it was resistance. There's where it turned to support, where it closed above. Okay, so that's what I'm looking for right there. That's 4,417. A better buy would be right there at 4,413. But maybe it just holds here and then reverses back up. Okay, so 1 more minute to go. So there's a deep push coming down. Okay. So if you wanted to buy, like, you know what I'm saying? You wanted to buy the highest point, fear of missing out. Now you're getting a substantial discount. How much is the discount from up there to where we are now? That's 110, 120 pip discount, okay? And if you didn't do anything on those buys, you see how the market can come right back down and flush you out? This shit happens, guys. That's why I said, you know, don't piss away money, guys. I know what I said earlier. I don't leave money on the table. I don't, because I've seen this happen a million times on every security, all time frames. Lock in money, guys, okay? Because this shit can happen. Now it's traded all the way back down into here. Here's the close, okay? We got to cut this. Okay, first thing is first, man. Okay, we close below there, red. Okay, there's now the retest right there. Will it continue to build? Okay, if it's building, will it break back out? Will it come back down? Okay, I didn't buy right away at the green box. I don't have pending orders in. Okay, I was just flipping the zones. You got 40 pips, Trevor, on the sell. Yeah, it's a nice sell there. Okay, at least now we've identified where the kind of neckline is. Okay, so what I'm doing is now I just want to get rid of this red line. I want to focus now on this red zone and this green zone. Okay. You could have been in a buy there. I didn't. You know, it was my mistake. It's okay. When you miss something, you miss something. It was a nice candle. 40, 50 pips. But when that closed, it closed really fast and just turned blue right away. I was flipping this zone. I was seeing, you know, you got to be ready. If not, okay, I'm not in. So again, do I just want to buy now right below that red zone? Because that's where they could push it back down. And that's why too, if you're counter trading with that sell, that could have been your daily goal right there, basically. If you don't do anything, see how it can come up. We're scalping the markets. This is scalping, guys. I don't know if you guys are swing trading. Well, if you're swing trading, what the hell are you guys doing on the 5-minute candles? That's the first thing I would be asking you guys. If you're looking to sell and hold a position till next month, don't be coming down on the 5 minutes. Stick to your higher time frames. This is kind of scalping right now. So those buyers should have did something. If they didn't, maybe they're getting saved right now because it came back into this block and the buyers are there. But it's now cannot get above this red zone. Sellers are pushing it down. So this candle now has exhausted 2.5 minutes. We got 2.5 more minutes to go. And we're going into 8:30 in a couple minutes. So just refer to your 30-minute candles as well. So this 30-minute candle is closing in 2 minutes. There was that huge all-time high break, has a big, massive wick on the 30 minutes. Where will this final volume close? Will it close back below? And in the next 30 minutes, might sell back down. It might be a black candle. If it closes below here, you know, you've got the liquidity grab above the all-time high, big rejection. Next candle could turn 30 minutes bearish. And then traveling back down to where it just found some initial support, break, and then start coming down to the bigger zone down in here. So we really got to watch how this is going to close now. And you can see now there's bigger volume in the markets. Look at the size of these candles. Like this candle is, you can see it's like half the size of the previous one, and it's about a 60 pip candle. So I know that this one's like 100 or more. So when we're trading next few candles, we need to adjust our risk accordingly. We're not trading with these small candles anymore, these little dojis. See how the volume has really filled up? So this red zone is very significant because if you look at the 30 minutes, you see, did any 30-minute volume close above here? That was that impulse breakout on the 30 minutes, and boom, they slammed it down. Okay, so it might come back up the next 30 minutes, but remember, we have a big wick. Same thing. If this was like a 5-minute candle, it's got a big wick. But if one of these did have a big wick, but that 5-minute candle backfilled it and filled it up. So a 30-minute candle could do that as well. If there's enough demand for gold and they're asking trade up there, it will fill. Here's the close. So it did close below there. So it could open again, shorter wick, could be blue coming back up. If I was just to cut that 5-minute candle in half right there, there's the ignited open. Okay, so when we're looking at the 30 minutes, the 30-minute candle did physically close below there. It broke out for that new all-time high, and now it's trading below there, which could technically come down if the buyers cannot continue to break it out and fill up here. So I watch it on the 5 minutes. So it's just hanging right here. That's usually SMT. What does SMT mean? What is SMT, guys? Teach Unc what is SMT. I'm not familiar with all of the names that you guys use. Smart money concept. Oh, okay. Okay, so that's a big bullish candle opening up. We look at the 30. It's a big candle, but it's got that big wick to fill. Okay. So maybe we wait for the first 5 minutes to see. Does the first 5 minutes, is it going to be strong on this 30-minute candle? Will it get rejected and come back down? Will it close above this red line, a red box? Okay, so there's a rejection that looks like an impulse break, but it came down, filling back up. So it's like a candle's refueling itself, right? Like a rocket ship, it comes down, it refuels itself to see if it can continue to go back up. Do you guys like this type of volume? I love this volume. Okay, if it can trade like this for the next couple of days, this is fantastic. This is better than trading this type of garbage down in here. This is nice. We got some nice moving volume, went up, came down, possibly going up. Maybe we can recognize some patterns. So this is good volume in my opinion. Okay, so we've got a rejection so far. It's closing in 2 minutes. You look at your 30. Remember, it's strong. It opened very strong coming up, but it's got a big wick to fill. So it's got, you know, some big shoes to fill. We have no news today. So no news scheduled, but if there's any world news, global news that happens live, we got to be aware of that. But there's no news scheduled today, any high impact news or anything like that. Asia was good trading volume. Yeah, Asia is normally good because it's right when the markets open up, especially coming off of a weekend. That's what created this big bullish day, was right at 6 p.m. on Sunday. We got 30 more seconds close. So this is a big bullish candle coming up. The 30-minute candle is still building, right? If this blue volume closes above here, I'm going to momentarily make this red zone green because it could be acting as support to take us again to that all-time high. So I'm just going to draw from the all-time high to those 5-minute bodies just to establish where we do have some resistance. It's up here. Can start to see that the pattern recognition opened up. So there's the big top. There's now the official neckline. It's coming back up. Will it go to the all-time high and go higher? Will it come up here? Will it be like a double top and start coming back down? Okay, so it did close above on the 5 minutes. So this zone is not red, it's green. So any pullbacks could still be holding in here. This candle could continue to drive up here. It could pull back right into 50% of this bar. If this doesn't hold up, it is holding right now. It's bullish ignited. KDR, you blew your account earlier. What did you do wrong? What happened? Be honest with us, okay? What did you do that blew your account? I can probably guess what you did wrong, but and it happens, guys, okay? It happens. Kraken, would you someday consider trading 1 minute scalping for us? Absolutely. I love 1 minute scalping. KDR, you're new to this. I opened a $150 account and I followed shitty Telegram signals and got greedy, increasing my lot sizes today. Okay. Yeah. But if you just go to random Telegram sites and following and copying their signals and you don't, that can happen, okay? So ideally you want to learn how to trade yourself and just not, we offer signals and trade ideas here, but we incorporated with what we do here with live education, live analysis too, okay? But it happens, okay? Now what you got to do, I don't know your financial situation, but $150 is gone now, okay? So you have to look at it with this type of mindset. The money is gone. It's gone. Now you got to look at it as like a paid lesson, a paid tuition. It's like when you go to school and you had to buy a class, $150 a course, or you bought some books or whatever it is. That money is now, you paid the markets $150 to learn now how to start trading properly. I know it sucks, but you lost $150. Some people lose $15,000. Some people lose $150,000 before they figure it out. So for some people, it's the lesson is costly. Might be more than $150. I wish when I was learning, it only cost me $150. I was that guy more on the $15,000, $50,000 learning my lessons. So it's not the end of the world. I hope not. Okay. We can learn from it. But now you got to go back and figure out what went wrong. Okay. That's how you learn how to trade. You don't just go right now back in and deposit another $150 and just try now to revenge trade to make that $150 back. Because I can guarantee you have no plan. You're new to trading and you'll probably lose another $150. And then you're going to put yourself $300 in a hole. And you're going to just go through that cycle. And it's going to take you months, even years, if you can figure out your way out. Some traders never figure out their way out. And that's why they're inconsistent, unprofitable, and they quit trading after a couple months or years. That's why, guys, believe it or not, there is like a 90% failure rate with retail traders. Not like 1 in 10 traders make it to be consistent. 1 in 10. Look at the numbers on this call. If there's 500 people on this call, you know, like how many of us are actually going to make it as successful, profitable traders, not just for 1 week. I know traders say, Ron, I've had an amazing last 2 weeks. Okay, 2 weeks is great, but let's talk, can you be doing this in 2 years from now? Can you do this 5 years from now? Maybe 10, maybe 20 years from now? That's what it boils down to. And you can see with time in the markets, you've got to have experience, you've got to have a plan, you got to have discipline, you got to have risk management, okay? If you're lacking one of those things I'm talking about, those are the things that you have to improve. And we're not picking on you. It's just that we've all been in your situation. We've all been in your shoes before, okay? We understand what you're going through. But what if in my opinion, like if you're asking me, Ron, what do you do? I would say stop trading right now and start learning how to trade. Start learning. Take your time to learn. You don't need to take live trades learning. You can simply just figure out how are your technical skills. Do you understand how candlesticks open, close? Do you understand why we do a top-down analysis? Start off with those things first. Guys, it's so much more powerful when you learn how to trade yourself, because you can do this anytime. No one can take this away from you, right? I know if you rely on signals and copy trading and other people, it's just, I don't know. I'm kind of against that style. Like, learn for yourself. Don't you feel more proud of yourself when you learn how to do this? Mo, I haven't traded anything today. I haven't. I was waiting right down there. That candle opened so fast right out of comex. I missed it. I'm still waiting for a pullback. Now it's approaching the second top of the all-time high. So I kind of don't want to buy into it. So I want to see if we'll have one more leg coming back down. Will it physically start to break out of here? But why is a trader is profitable and you follow every single and you end up still in negative profit? Could be your leverage. Could be you, maybe the trade takes a little bit of drawdown, but the person offering it maybe has a lower risk and you're over risking, over leveraging, and you get stopped out. I don't know. I'm not here to talk for other Telegram channels. I don't know. Guys, we'll do one index in the next like 10 minutes. What would you guys like to do? US30 or Nasdaq? I'm not going to do both of them today, just one of them. You guys decide which one you guys want, and we'll do that as a top down alongside with gold. So, you know, guys, I know I didn't buy. Okay, I feel like a piece of shit on this call right now because that was what I was waiting for. I was waiting for it to come into this zone right here. Remember, we marked it off on this run up, but this candle 820 was comex coming down and it just opened right there and just started blue. I didn't have a pending order. If I had a pending order, maybe I would have been activated. As soon as it started going up, I was waiting for this thing to come back down one more time to pick me up. It didn't. And I missed out on it. But anyways, if you guys are learning about this location, go rewind the video and find out why this was a good location to look for a pullback buy. Okay. We're also here to educate. We're not also just here, just live trading and just sell, buy, sell, buy. Okay. It's all about education here too. So if you're now, we're looking to buy, and you missed out, that's where you should have been looking to possibly entertain the buy. Why? Because remember the white line. It's an hourly location. Remember what we were when we did the top down. Okay? That's why it's significant. It's better than, remember, just when it came down right there. See that selling pressure came all the way down and it came right into that location. Okay? So that's the significance about that. Now it came right back up to the double top, all-time high. It didn't create a new all-time high, and now it's below here. Okay, so it came up, got rejected. Now is it going to come up again and break through here, or is it going to get rejected and it will have a selling leg coming back down? So you still see how it's still bullish, still coming up. Will it continue to fill its wick and produce a new all-time high? Remember, the job of this bullish candle is to fill this wick and create a new high. If it fails to do that, you can still see maybe then the red zone is still holding up and can push this thing back down. Then when it comes down, it might test this green zone, even this red line, and then ultimately all the way back down in here, okay? So if we're looking to sell, it's better to sell a second top than just a single top. But we have to be careful because it could continue to drive for a new all-time high and squeeze. So got to kind of maybe see, will it continue to get rejected here? I know it came in once. They pushed it down and then it came back up. Are they going to push it down again? Or is it still blue and buyers are asking to trade up here? I'm going to break it out of here. And then same thing. Then we're continuing to drive. It's making new highs, didn't really break down, new all-time high. If it closes above this, you're going to flip that red zone green and probably build off of that. And this thing still has legs to continue to drive. And it's not ready to have the second leg coming down right now. Okay, so now, and then we also got to study when it's breaking, will it just be an impulse and then they rejected it hard back down? Okay, so that's what we got to look for. Whether you're in a trade or you're not, you still have to visually see what's going on. Okay, so it came in there, came in there. The question is, did it break above that previous high? No, it didn't, okay? It didn't. Unless I'm blind, I can't see what's going on here, but it looks like that wick did not get above that wick. So technicals, that's a lower high. The seller's still in this red zone offering to push this blue volume down. And it's in the second top up here. And now half the candle is exhausted. We have 2.5 minutes. This is a 5-minute candle. So we have 2.5 minutes to go. Awesome. Good trade, Bradley. You got it. Man, that was the candle I wanted. Bradley, I'm going to live through you. I'll pretend I bought it through you. Oh, you had the limit order at the fit. Yeah, guys, that's another thing. Like, I don't use limit orders, personally. But if you had a limit order filled in there, you get filled. I take market executions. Okay, so it was too fast. It just opened and went up. Like, I had to buy it right away. As soon as it came up, I was waiting for it to pull back down. It didn't. It just kept driving. I was waiting for the pullback at 50%. That's why I placed that red line. It didn't. And then it closed above. I could have bought that right there, but I didn't. So I hate saying I could have done this. I would have done that. I didn't. I didn't do fuck all. So that's where I am now. So I'm now waiting and see how now the selling pressure is coming down. Now we got 60 seconds to go. So there's the official double top is solidified. It didn't break a new high. Now we have a shooting star candle coming down at the second top. Okay, so now I'm watching the volume. Will it engulf? Will it close below there? Will it close halfway? Will it come back up blue? This is what I'm watching now. Okay, when you miss a trade, you miss a trade. You got to get ready and prepare for the next trade. You can't sit and look and cry and this and that. That trade is gone 20, 25 minutes ago. We got to look for now the next trade or the next leg. I don't get caught up if I miss a trade. Like I missed it, that's it. And then I'll look for another one. That's the beauty of being a scalper or an intraday trader, is if I miss a trade, it's all good. I'll find another one. Find another one next 10 minutes, 20 minutes, 30 minutes, 1 hour. Okay, so here's the close now. So there is official rejections up there. Sellers didn't engulf all the way down there. Okay, so now it's starting bearish. Okay, I'm going to go in now, okay, on a sell. And then where am I placing my stop loss? Above the red zone, okay? A hair above the red zone, because in case it comes back up, I don't want the buyers to impulse break out of there or even officially close above there, because then could go higher. So my stop loss, maximum risk I'm giving on this second leg that could sell down is just above the previous high up there. Where am I looking to go? I want to see if it can come back down. If sellers can come back down, break this green zone and travel back down to this candle, 50% that has not been transacted yet, because it could come right down there to the red line and go right back up. If the red line can't hold, then obviously we're going to drive down to the green box. Okay, so I'm going to sell second leg with those rejections up there. It's in profit right now, but I'm not just looking to make, if I wanted 15 pips, 20 pips, I want to see what will happen below this kind of green zone. That would be about 35 pips. And then ultimately measuring to the red would be about 60 pips. And then if it can come all the way back down to it could be 90 to 100 pips down there. But first thing is we got to go to this block and see if we can get down there, maybe physically close below it, push down, create a new low. And when we look at that 30-minute candle, okay, so the 30-minute candle came back up there and pushing down. So this 30-minute candle is closing in 8 minutes. Can the sellers push it back down below that green zone? Then maybe the next 30-minute candle would be a black candle coming down. Will they hold it back above here? Then the next 30-minute candle has to drive back up those wicks, because we are going into 9 a.m. very, very soon, okay? Just after 9 a.m., 9:05, I'll do... did you guys choose on Zoom, Nasdaq or US30? Okay, I see all of you guys are Nasdaq. Okay, so we'll do Nasdaq this morning. I'll do it like around 9:05. Give me about 10 minutes. I'll get it done, and then we'll get ready for Wall Street market open as well. But let's see where this bar can close. I'm in a sell. Yep, it's a sell. I'm trying to sell the second leg on the 5 minutes at the all-time high to see if it can break down, maybe revisit down somewhere down into here. I'm counter trading this bullish move, but I'm looking to sell the second leg to continue to push down. And maximum risk is above the all-time high. If it comes up there, I'm out. I'll realize my loss and get out of the way, because then I got to move out of my way for those buyers. Okay, so 90 seconds. It's in the money just by a little bit. But now I got to follow. Where's this volume going to close? Because this candle could flip and turn bullish and be right up here. And then, guys, I don't need to sit and wait in the market and get my stop loss tagged out. I can trade the candle as it is live. If I feel like it's flipped, maybe I don't want to be in it anymore, it's coming up here, I can close the trade and just get out of the way, right? So that's why I trade the volume in the bar. So far it's trading near the lowest point again. Now we're coming down. Can it produce a new low? Is it going to come right into this green box? And then the next 5-minute candle is going to be a blue candle just like this one, building out of here. Will this black candle have enough momentum to close below here? Then I'll flip it green to red, maybe get the next bar, continue push down, and then I got to do something at this red line, that's where I will be reducing my risk 100% in the trade. But I got to go now to the close of the price, next 30 seconds. It's going in my favor, but it could flip on the next bar, right? If I was just looking to grab 20 pips and get out, I could. That's like 1 minute scalping. But if we want to play the bar out, we got to play it out. If it closes down here, I cut it in half. Because next bar open blue, it might come halfway and then break. But we're at this solid location. We're at this block now. 5 seconds going to the close. Okay, so I got to get my cut line now. There's the close, there's the cut line right there. Okay, so we have a short wick on it. It's blue. Okay, there's the rejection. So we might be able to push down and clear this little green zone. I told you guys, if it comes down to the bottom of the green zone, it's about 35 pips. Okay, so right there is about 30 pips, 30. So this is where, if you like, you can start to control your risk. You can start to bring your stop loss down. Now we're transacting in this green zone. It's green for a reason. There's buyers here. So you see it came down. They're still there. Now it's coming back up. So we still have 50% of the black candle that has not been transacted yet. Okay. So if it comes up blue, 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 we still got to go into the point of control. If we get a lower high, that's good. Then it's a shallow pullback. Then maybe sellers can continue to bid down the wick and break it down. Okay. That's 30 pips right there, 30, 35. Let's see if we can break down further. We got to break this block right here. Going into 9 a.m. Okay, that's another thing. And that's when momentum switches, right? So you see it's a blue candle building at the green zone. Now we're testing at 50%, where I chose to put the cut line. Okay, can the sellers hold it down? If they can't, then buyers will bring it right back up to where I bought in, maybe engulf this candle. Okay, then I go back in drawdown because I didn't do anything at 30 pips. But now you see the retest is right at 50% of the bar. They're pushing it back down. So it's kind of one of those indecision candles. But right now it's still building with the blue volume. Justin, good morning. Thanks for joining. Good candle, good rejection, right at 50%, right? Right at the cut line. Okay, get to know how to cut bars, guys. I cut bars for a living. Now we got a bearish pin bar. Hopefully we can turn it into a shooting star. The candle has done its job early, breaking the wick, but let's see if we can push through and maybe start to come down and transact down into here where this blue body started. Ultimately, can we get black volume close below this green zone going into 9 a.m.? Because if the buyers hold it up here, going into 9 a.m. could be a blue move coming back up, right? So it's just so important where this bar closes. And the buyers are still here. So this is where it might go against me now, right? Okay, so now it's a blue candle coming back up. Again, testing the point of control one more time, with 2 more minutes to go. We've got to watch where that 30-minute volume closes as well. See where the 30-minute volume is trading? Right at that green zone there. So it's at a tough location. It's not easy to break this for sellers, but if it breaks, we could get a bleeding candle coming down. 90 seconds to go into the close. I'll do Nasdaq, guys. Nasdaq at 9:05. 9:05. Give me 5 more minutes, and then we'll do Nasdaq. Agent Smith, counter trading is not easy. No, it's very difficult. That's why, you know, when it went right down there, I shoulda, woulda, couldas. Could have reduced my risk at break even. Now I would have got tapped out at break even. But when it came down to those 30, 35 pips, maybe I should have done 80% out. And now you can see, I traded this one. My plan was to break down into here. Okay. If I made my plan to just trade to the green box, I would have. You guys would have heard me say that. But my plan was to come down into here. Okay, so now I'm in a little bit of drawdown. Still have this red zone above me. if it comes up there. Well, let's see where this thing can close if I'm still in it in the next 30 seconds. So here's the close going into 9 a.m. It looks like it's a 5-minute bullish engulfing bar, short wick. So traditionally, the next candle should open blue, ignited just like that, continue to come up, but it's got these big backfilling wicks over here, those two that got rejected at that red zone. So if there's going to be a seller, it's got to be here very, very, very soon. If the seller doesn't come in to taper this volume down, then it's just going to continue to drive and fill. And there's where my stop loss is. And my stop is just right up there. I'll verbally let you guys know as soon as I get stopped out. And then if you see that no seller comes in, you can see how strong the buyers continuously are, even at a second top on an all-time high. Okay, so we're trading at 4425. There is a little bit of a wick there, but big bullish candle incoming in. I can see that there's volatility here. Okay, so there is a rejection back at that red zone, but remember how the candle opened? Bullish, ignited. So it's an inverted hammer candle. It's a very strong candle. So as it came down, it's continuing to refuel back up, fill that wick, and possibly start to break out higher. There's another rejection there. So when we look at that 30-minute candle, the 30-minute candle did close with the volume above. Next one opened up, bullish, ignited. And you see it's coming up, filling those previous 30-minute candles. But if we get a rejection here, still a lower high, and if we lose that ignited bottom, then the 30-minute candle can flip to a shooting star, and maybe we can start coming back down into profit. So this 5-minute candle is holding this inverted hammer open. Okay, it's still holding this. It's tough to break this shit down. So there's another solid wick in there. How many times did it transact in that red zone and got rejected? I'm counting 4 times right now. But the opening price is so strong on this candle, and this is the first half, 2.5 minutes. Now we've broken that opening balance. Okay, so we have another rejection wick. That's why I placed my stop loss above the red zone. Now let's see if we get that bear volume coming back down now. Okay, so you see now we've got a shooting star. So I encountered 30 pips of profit. I didn't do anything. And then I just got like 20, 30 pips in drawdown. Now the trade is coming right back in the money again. Okay. So that's the reasoning behind having a stop loss, guys, is to place it at a specific location and let the trade play out without panicking. Okay. And let's see now if it holds up. Maybe we got new hourly sellers now in the market at 9 a.m. ready to push gold down. When I got in the trade earlier, 9 a.m., that's that switch up where it came back up, but let's see now, okay? So this candle has 90 seconds. It still hasn't done its job, still hasn't closed below 50% of that. Blue candle hasn't transacted back down into this green zone. This could be another one of a higher low and continue to go back up. So we got to watch how it's closing. Now we're barcoding, black, blue, black. Okay, so you got buyers buying and sellers are selling. Buyers are buying and sellers are selling. But we're still at that second top. We have a 1 rejection wick, 2, 3, 4, 5. Okay, all we need now is volume to start moving back down and start to break down in here. Next candle could open blue and come back up. We could be black, blue, black, blue. With 1 more minute to go. Okay, and in the last 30 seconds, I watch like a hawk because the last 30 seconds show who have momentum going into the close of the bar and who can carry that momentum forward into the next bar. So it came right down there to the red line. That was 50% of that, previous black candle, blue candle, holding support, coming right back up. So you see, it's a spin top candle. It's basically a 50-50 coin toss. The buyers were in charge at the beginning, sellers brought it down. Now buyers are bringing it right back where we kind of opened. So could be a coin flip unless it closes with some solid volume. So look at where it closed, right where it basically opened. Okay, so all of that range and it really just closed where it opened. Okay, so it's anyone's fair game right now. Again, 50-50 on that one, but sellers are starting on the next bar by opening it bearish ignited. So they're carrying the momentum. So let's see if it can continue with this bearish ignited head that we just had to continue to fill that wick. So far they failed. It's a higher low. So buyers are bringing it right back up. If they flip this candle, then they're driving back up that wick into this red zone again. Okay, but it's still, you see, it's still holding its bearish ignited head. Okay, so that's the importance of understanding bearish ignited opens, bullish ignited opens. They are in control of this candle right now. They need to continue to break that low of that wick to continue to travel down into this green zone. Again, they failed. Look, they came down. It's got a higher low. So now the buyers are pushing it back up. This is what we call a hanging man candle. Still has that bearish ignited head, and they're probably going to lose it right now. You see, they failed. That candle failed to do its job to break that low. The sellers are still weak right now. So it comes back to the opening price where they're offering again. Will they come back down with more black volume now that they offered more to those buyers that pushed it up and can continue push this down? If this candle flips blue, then it turns into a hammer and then starts filling up the previous wick. Okay, so they still have not penetrated into the opening balance. Still see, this candle has not flipped blue. So that's what a hanging man candle is. Learn what this candle is over the holidays, guys. Learn what a hammer is, an inverted hammer, a shooting star, and like your engulfing bars. Learn what those are. Okay, so you see, we lost that bearish ignited open. So now the candle flipped blue, produced a little high. That's the wick. So that's what we call a pin bar candle. So I can no longer say that this is a bearish ignited open because we lost it. The wick is showing that. Okay, but now the volume is trading sideways. We've got some consolidation now. But it's still, with the higher time frames, moving higher lows. So again, I'll let you guys know as soon as I get stopped out above this red zone. Because now we got more buyers coming in at 9 a.m., could blow right through this, and I no longer want to be in this trade any longer if it starts breaking above here. So I got to continuously rely on sellers offering up here to continue to be here, offering to continue to push us down with lower highs prior to breaking out of here. And we're caught in this little tight area, consolidating right in here. So when it came up there, we got a lower high, sellers are here, pushing it back down. But the candles got indecision, going up, going down, going up, going down. It's going to close in 90 seconds. Where will we officially close? When volume gets like this, it gets frustrating. It gets frustrating. We're no longer like trending. We're just caught in this range right now. We have buyers and sellers both accumulating. I need like 5 minutes, guys, and I'll get to the Nasdaq analysis, but I just got caught in this trade. If I go to the Nasdaq, then I'll put a hard stop in and I'll monitor it. And we can still do Nasdaq. Just want to watch the close of this candle in the next 30 seconds. It could also go down. Yeah, it could. That's what I'm in a sell, but it's not creating lows, and the sellers are not closing it with convincing black volume right now. So buyers can sense weakness maybe on sellers, and buyers are continuing to buy this uptrend. But yes, it could definitely go down. Yeah. So it closed again right where it opened, again with some thin volume. So it's either buyers could continue to buy and take it out of here, sellers could bring it down. Okay. So I'm just going to place a hard stop in the market right now. Okay. Just give me a moment, 2 seconds, guys. And then I'll do Nasdaq and I'll continue to monitor this. Okay. So I got to stop up here, and you guys know what I want for profit wise, to see if we can push down into that green block again and break for that new lower low. And maybe we can see it push down into there. Okay. But again, the bar open ignited strong, green coming, blue, sorry, coming back up, bullish. And see if it can continue to hold down. Okay. Okay. So I'm going to do Nasdaq. 1 second. Let me just pull up Nasdaq here. Okay, so Nasdaq is breaking out on the 5 minutes right now. I'm going to do a top down. So I'm going to start off on the daily real quick. Daily analysis, Nasdaq. So this is more of a tech index, right? So it got to all-time high right up there, 26,285, orange line all-time high. Is there a zone right below there? Yes, there is. Orange all-time high. Bring it down to those bodies like right there. Make it red. Transfer it into the future. Okay, so I can see that we did come up right above here, but again, didn't have enough juice to get into that all-time high. Push down. Now it's building right back up the last 3 days. So this was Thursday, Friday last week, and today. Do we have a pivot where it came down and found the bottom? Yes, right there. You can clearly see where the pivot is. So yellow for daily point of interest. And then if I need a zone below the pivot, I can see the yellow line right there was a red zone. Then it turned right there when that bullish candle closed above, turned green. Demand, stretching into the future, came in there, holding. So stretch that into the new year. Go into 2026 in February. If Nasdaq ever pulls back down in there, you could be buying just below 24,000. Okay, there's another pivot right here that just came in the market and pivoted right there just last week. Okay, so it's holding. 24,687 is holding up right here. Okay, so we're continuing to move up through here. Now let's focus more on this point. Where do we have like a daily point of interest? Right there, okay? You see where it is? It's basically, if I was to see this big bearish candle right here on the daily, if I come down to like 50% open close somewhere there, there's a wick, there's an impulse, and there was the first bar that closed above, and it was a fake out bar last Thursday. Look at where it closed, like a bullish pin bar, and then they opened Friday, bearish ignite, and brought it all the way back down, okay? So if I'm just looking at this big bearish candle, grabbing my Fibonacci tool real quick, from that opening of that balance to the closing, figure out where half of it is, cut it in half. We're trading right above it right now. So if I go with a bearish point of control off of that bar, we're trading right into it right now. Okay. Gold is bullish. Yeah, I'm watching my stop loss. I'm still not tagged out, but they're going to get me right now. Simultaneously doing this and watching my gold trade. There is a wick there, but they're going to clear it. We'll see. It's closing in 2 minutes. Okay. So it's very bullish right now. Gold and Nasdaq. Fuck, it's hard to do these things 2 times here. Okay. Cutting that bar in half. Bullish. 25,200 right there. Hasn't pulled back. If we look on Friday's volume, it closed right near the high. Look at today. Okay, how did today open? Looks like it's a strong open. Bullish ignited. It popped the wick and it's driving bullish. So there's my purple opening price. It's the lowest point of the day as well, and it's bullish, 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 and we're trading at the highest point of the day right now. 15 minutes going into Wall Street right there, okay? If it continues to fill, maybe it will come up to, you know, the body where that big ignited bar started right there on Friday, December 12th. Maybe if I'm just looking for some intraday trading, maybe I cut it in half from the red zone to the yellow line right there, halfway point, cut it in half if it continues to break out today, okay? Now going to the overall pattern, what do we see, okay? What is this overall? It came up, very bullish, all-time high, came back down, found some good support there, coming back up, but you see it didn't break for that new all-time high. Right there, it's got a lower high, but when it came down, it didn't come all the way back down to here, to the green box. Buyers stepped in, higher low, and moving it right back up. So we're gonna start maybe transacting in where all of that volume is. Maybe it will break out for a new all-time high. Maybe it comes in there and then they bring it right back down, okay? So now what I gotta do is, it's very bullish daily, go to the 4-hour, figure out when did this volume start coming into the market? Was it Europe? Was it New York? Like when did all of this come in? We can see the bottom down here last Wednesday, came up, back down. If you're looking for 4-hour pivots, I would be looking for a white line right there. There's a nice 4-hour candle close. Again, if you're looking at 4-hour candles, 50%, it came in, continue push up. There's the big volume. It was at the opening price. Oh, gold, big rejection, guys. I'm still in it. There's a nice candle coming down. Okay, I never got stopped out. But let's see if we can carry with this down. Okay, I'm in drawdown on the gold, but that's an excellent recovery up there. But again, every time it comes down, it gets that higher low. Now that higher low could break, and then that next push, I'm out of that. Okay, so where were we? On the 4-hour. Yeah, they flipped it. I spoke too soon. Okay, so the big 4-hour candle was Sunday open, 6 p.m. Okay, little inside bar 10-2. Here's Europe, 2 to 6 a.m. Big Nasdaq volume came in pre-New York, 6 a.m., 7 a.m., 8 a.m. We have 45 minutes till this bar closes, so it will represent part of Wall Street. Still very bullish, but you can see overall, like if we look up here, there's sellers there, sellers there, sellers there, sellers there, but it is rotating its way back up, okay? Very strong on the 4-hour. We go into the 1H. I'm just watching the gold. I got tapped out right now of gold. Okay, so I got stopped out on mine. I got stopped out. Okay, so I'm out of that gold trade. I got stopped out. Okay, so I got to focus on this. Where were we? On the hourly here. Okay, so it's moving higher highs, higher lows, higher highs, higher lows. You want to draw a little hourly trend? You can. There's your hourly trend line. Keep it consistent with the hour. White, it's still moving up. Okay, so it's building. Any pullbacks, if Nasdaq sells right there, the yellow line might be a good opportunity to buy a pullback today, 25,500. Nice psychological number. There's the first hourly bar that closed above. So if it comes back down, that might be a good opportunity to buy right there at that yellow line. So I'm going to place an alert there. Add an alert at that yellow line. Maybe today I get that pullback buy. Okay. Now we go to hourly above this red zone. You see right there where the hourly candles broke out right there. Friday, 8 a.m., 9 a.m., and then it had that big sell-off. Mark that area just for today so you know right there. Draw a white line right there. And it is, in fact, representing 50% of that big bearish candle. Friday at 4 a.m., there was the pullback where it came right into there, and then they really pushed it down. So you see, we're not too far away from that white line, 25,605. Okay, if it gets in there, that might be where sellers are to bring it back down. Right now, it's still very bullish. Look at the last 3 hours. Higher highs closing near the high, small pullback. Higher high closing near the high, small pullback. Continuing to drive. This hourly candle is closing in 40 minutes. Yes, it's starting to get a little overbought, but still driving. Okay, if you look on the 5 minutes now, 5-minute candles are still making it up there. Pulled back, new higher high, pullback, new higher high, pullback, new higher high, daily high, okay? So you know where I placed an alert? At this yellow line, like right in here. If I look a little bit above, like a little bit below, I draw myself a zone there. That's where I'm looking to entertain maybe a pullback buy on Nasdaq. I'll wait there. I already have an alert set. If it does naturally come down in there, that's where I'm looking to buy, to take it back up to wherever the resistance is, maybe a pullback, and continue driving out of here. Okay. When it comes down there, I have an alert at least set for today. Okay. Right now it's still building. Okay. So Nasdaq is very, very strong. Daily candle is, wow, look at today's daily candle on Nasdaq. Unbelievable. Opening bullish ignited and is trading right at the highest point. Very, very, very bullish. Everything has to be above the 9 and the 200. So we'll leave Nasdaq right over here. 10 more minutes till the market opens. And gold, guys, I got stopped out of gold. So when I get stopped out, I review the trade. I took an L. I took a loss. Now I got to get back in and figure out what's going on. Did the volume close above this red zone? Technically, it closed right there. Has not officially closed above it yet. So got to continue to wait this thing out. And we'll be focusing on Nasdaq going into Wall Street. Okay. And in just some small like scalping points of interest, right there, there was a 5-minute point of interest that held like a top, a resistance. It came back down and then just broke above there. So if it does pull back, I'd like to see what this red line will do. I know we're going to get Wall Street volume, so it could naturally just break through all of these, you know, these small lines. Then that's why I rely on the bigger zones, the points of interest on the daily. Maybe if I had an hourly. There's that hourly one, okay? Yes, I know. I see gold coming down. Again, it could be one of those things that they just grab some liquidity up there, right? Maybe I provided some liquidity to the markets. But again, do I just sell now because I'm mad because I got stopped out? No, because you could be just playing the same game where it comes down, you go, and then it comes right back up. So I don't even want to entertain this. Sometimes when you get stopped out of a trade, take a mental break for a couple minutes and figure out what went wrong, what happened, you know, review the trade, go over it, okay? And learn from it. Because if you just jump right back in, because they're showing you a black candle, yeah, it's exciting, it's a black candle, but you go back in and then they just turn you right back up and continue going up. And then, you know, it's kind of fitting in like revenge trading. I'll let this bar close. Wherever it closes, if it closes back blue above here, I flip that. Buyers are still in control. If it comes back down black and closes below there, okay, then there was a grab up there. It could come down. It could come right back in and go back down. But, you know, you got to continue to review it. Boxing Day is the New York home. They're open, but it might be early closing. Okay, just keep that in mind. Make sure you double check. Okay, if you're going to trade on Friday, make sure you look at the hours of the markets, how they're operating. Okay, you might get an early close like around noon or 1 p.m. for certain securities. Guys, I'll let you know if I'll be streaming tomorrow. I'm not 100%, but if we do, it will either be a New York or post-New York session. I'll let you guys know, like in the Telegram and on Discord, if I can do it. If not, I'll be, taking the break, getting ready for the holidays. And again, Monday, Tuesday of next week, we may or may not be streaming, but more than likely we will be on the Monday. Okay, and then we got 5 more minutes for Wall Street market open. If you look at some pre-market trading right now, maybe some Nasdaq securities, let's see what's going on. Let's see here in the pre-markets, anything. AMD is up 3%. Micron is up 4%. NVIDIA is up 1.7%. Okay, so pre-market looks green across the board for most securities. Will that spill over into the market? Will there be like a dip in the market and then a pullback, continuing to buy? Have rules, guys. Are you going to just jump right in at the first color you see on a candle? Are you going to wait 5 minutes? Are you waiting 15 minutes? We went over, there's no real significant news today coming out. Nothing actually that can impact these markets. And I will be flip-flopping from gold into Nasdaq, okay? Gold has a nice big bearish candle coming down. Yes, it does. Okay, so will this bear candle close back below here? Come back in, figure out where the cut is of that, might push down. Maybe that might be the leg to push down, or just continuing with the higher lows and continue to drive back up. So gold can be a little tricky right now. We got 3 more minutes to go, guys. Subscribe to the channel if you guys would like to. We do appreciate it. And join us in the new year. We've got a lot of exciting new things coming. Gold. You guys keep telling me go to gold. Yeah, you got to just be careful. Wait for that bar to close. See what I mean? It comes down. I get that wick again. Next, it could open bullish and continue breaking out of here. Just be careful, guys. Gold is... I hate when it trades kind of erratic like this, Wow, big return on Nasdaq, big bullish hammer candle. 90 seconds to go, continuing to make new highs. Okay, that selling candle continue come down. It's going to close in 1 minute as well on gold. One more minute to go, guys. And Wall Street market open. Coming off of the weekend. So it could be a lot of volume coming in, a lot of sellers, a lot of buyers. It could just continue with the move that it's doing and just continue with this. There could be a lot of range. Just be careful. Monitor your risk and have a plan. It's way overbought gold. I know, but don't use that. It was overbought when I sold, and you saw I got stopped out. So, okay. So Nasdaq is opening up, very bearish. It could just come down and grab a wick and go back up. Gold actually closed below. It's got that ignited push coming down. Okay. There's that wick. Where was the wick? Right at that red line, guys. You see, there was that 5-minute resistance, turned to initial support, came down, grabbed the wick, going back up. Okay, so there it is. You see where it grabbed that wick? Man. Okay, so when it came back up, it's going back down, still building here. That was all in the first 45 seconds, okay? So remember, that's like the first 1 minute of market open. Gold is selling down. I know, I see it. See where all that support is at that red line still holding. So there's a clear example of how resistance with a body that closes above turns over time into support. Oh man, gold. So I got to analyze this after the call. That blue candle at 920, 925, 930, then there was the drop. So was in just a little too early. I didn't do anything at my 30 pips of profit, and the market came back and got me. It happens. Okay, look at how crazy the Nasdaq candle is. Lots of range, lots of volatility. I don't like trading these candles because they don't have it doesn't really have, I don't know when it closes, but if it has a big body on it, I don't like these big range wick candles, wick to the upside, wick to the downside, small bodies. I hate these candles, okay? So it's a lot of indecision, big range. Closing in 2 more minutes. So now you got big volume coming in. Let's see where this will close now. Holy shit. Okay, see what Wall Street can do? Just the first 5-minute candle can engulf a lot of structure. Look at that whole thing built from 8:30, 1 hour building and 1 5-minute candle. When the market opens, can liquidate everything there. Okay, so to those buyers, I know you want more and you want more, but look at what 1 5-minute candle can do. It's that disgusting. Holy shit. Okay, so where will this body close? Will it close below this zone? Will it come back up? I'm sure that we can eventually cut that candle in half and find the point of control off of that. If it was to close like this, we would find the opening balance, closing balance, cut it in half, figure out the point of control, stretch it into the future. Because then if it does come back up into it, maybe we could sell at a premium and push the market down. Okay, and we got 44 seconds to go. So you see how they faked out those buyers, right? If you buy, I understand, like you're looking for it, but it already ran up and then the market kind of came back down. Same with gold. Holy. Yep, we just had to wait for the market to open. Okay, so I'm just getting rid of this zone. I'm gonna, because I have a yellow line there, but I want to base off of this candle. So there's the open, there's the close. Okay, so I'm cutting it. There's the cut, because if I want to sell maybe this big pullback. It might not come to me, right? It might just continue just to sell and continue to drop lower, okay? Okay, so it's a blue candle coming up at our supporting line. There's that point of interest right there. Has it transacted into the point of control? It has not yet. What do we do? I'm going to set an alert there. Okay, it got rejected right now. Okay, so it could just technically start to break right now and drop even lower. Okay, it's a shooting star candle. Man, you're waiting for those pullbacks and it doesn't come in. Then it presents you this candle. And then sometimes you take the sell and then maybe it will come back up. Okay. This purple line is a 200 EMAs, just so you guys know. I know some of you guys use this indicator. Gold close below there, go green to red. Okay, these are those indecision candles. Okay, we're at the halfway point. 2.5 minutes to go. Lots of indecision, pushing down, going up, coming down. We have not transacted back into that point of control the first 5 minutes of Wall Street. I'm waiting patiently for it to come in there. I missed out. And gold. Gold's coming right back up. So you could have done the same thing with gold. Open, close, figure out, cut it. Because it can come right back up, okay? I'm not, but I just want to watch Nasdaq for now. I like trading US30 myself. I don't normally trade Nasdaq when I'm trading by myself. I like gold now, so I'm doing a lot of gold trading, but US30 is my go-to security. But Nasdaq is okay too. Nothing wrong with it. Okay, so this candle is closing in 1 minute. Remember, it opened, was bullish, came up there, got rejected at that daily point of interest. Yellow line came all the way down, made a low there, came up, came down, came up. It was like a spin top, but now there is some black volume going, maybe possibly going into the close. That could close down here. Buyers could bring it right back up. We still have not transacted back into that point of control from Wall Street. Still have this indecision candle. Still haven't really moved anywhere here. It could just be consolidating. Next bar could come back up blue or just consolidate here and then continue selling down. Okay, so regardless, I'm waiting for this bar to close. Next 10 seconds to see what happens here. And there's the close. Okay, so it is technically still bearish here. Is it building its way to come back into here? There's the blue candle. Okay, so it's coming up. Remember, the blue candle's job to do is to continue to fill that wick. And when it fills the wick, then it might be transacting into our red zone. However, it might not even fill the wick. It might get a lower high and continue coming back down. Okay, so it's got the blue coming back up. There is a lower high wick that they've rejected it. Okay, so that might be like the final rejection there. You know, maybe it doesn't come all the way back in there. Maybe that's it. They're offering at that daily position, ready to drop this thing down. It's still building with this blue volume. Again, it's got this nasty kind of spin top candle. Wow. Okay, I'm going to go into sell on Nasdaq. I was waiting and waiting for this red zone. It didn't come to me, but the yellow line is holding. That's my daily position. So I'm looking to break this red line right here because that was like that 5-minute support right there at midnight, and then see if it can continue to break down and drive into right there, 50% of that bullish candle, cutting it in half right there. That would be about to take it down to 25,400, 390, okay? And my stop loss, I'm gonna put it above that point of control, just in case it needs to come back and retest in there, then maybe those sellers will step in and push it down. But I'm gonna sell on Nasdaq. This will be my last trade of this session, and I'm gonna follow this volume to see if we can create new lower lows and lower highs and continue to penetrate through here. So just coming down to that red line again, 30 pips. That was like the gold trade I took. It went right down there, 30 pips in profit. I didn't reduce risk, and you guys saw the aftermath. So 30 pips to the red line. If it gets to destination down there, it would be about 70 to 80 pips down in there, okay? We've got some lower lows. We've got lower highs in the market. We have not tapped into the point of control. That's why my stop loss is just above it, okay? Can you guys see? We got 2 more minutes to go now in this bar. So I would love if the sellers can close with a volume below like some wicks, below this, so that we can create like a wick of support to be resistance to continue to push down. This is like a small little red block at that daily point of interest yellow line. Nasty volume. Okay, it's a lot of ranging volume. So I just got to kind of follow the closing price. 1 minute to go. $60 more seconds. Gold. Gold coming right back up to that zone. Okay, it was a nice sell, but again, if you don't do anything, guys, look at where it sold right into. That red line. That's what I was looking for on the original sell on gold, was to come right into the red line. Remember, I had a TP right there. So there was a specific reason why I was targeting that red line. 50% of that bullish candle that started that leg up. Okay. Now let's see where this Nasdaq volume is going to close. And we're going into 9:45 with a new 15-minute candle opening up as well. Okay, so it did close with a little bit of bearish volume. Next bar, open bullish right away. Okay, so again, it's got jobs to do to fill wicks. Remember, this is now Wall Street, so much more volume than trading like if it was 4, 5, 6 a.m. It's a lot of volume now, but if we can continue to get our lower highs produced, that's good. And then we just got to continue to come back down to the opening balance, break, turn black, and see if we can continue to fill our bottom wicks and produce new lower lows. So we do have a lower high currently, lower high. We're below the daily point of interest. We have not transacted into the point of control of the first 5-minute candle of Wall Street. So they are lowering offers. But let's see now, we got like the top forming. Now they got to just finish off the bottom. They got to keep bidding down to fill these wicks and to continue to push down and maybe break some critical support levels that were built all day today. So there's that pivot right there that I'm looking to break. That was at 12:30 a.m. Eastern that held Nasdaq up. So let's see with the New York volume if we can continue to penetrate and fill and break that supporting level. Okay, so now we're just kind of consolidating here. Sometimes it takes just a couple bars of volume to see the consolidated volume, which could be right here. Okay, so you see how it filled back up blue, 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 but then the offers were there pushing it right back down, but it's at the opening balance. Okay, so this candle has strong buyers at the opening balance. It still has 3 minutes to go. That's a long time, but we can still see how strong it is with buyers. So these sellers really have to diverge it away from this opening price, get down to low, and start moving it away to make these buyers of this candle think about their position. But they keep loading it up. So me as a seller, I got to think about my position now. So if it doesn't really hold at this, this is not the real true point of control. This is just a daily point of interest where it got rejected, and it's still keeping its lower highs. The real point of control is up here. That's why my stop loss is above there. And this is also the first 15-minute candle that just opened as well. Okay, so when I always say sometimes momentum switches on a 15-minute candle, a 30-minute, an hourly, it can open in your own favor. If you're like in a buy, if you're in a sell, it might open up in your direction. But if you're in a buy or sell, it might open up against your direction. Okay, and that's why you got to rely on upper resistance or support if you're in a buy or a sell. I've already determined my risk in this trade. I didn't bet the whole farm, the whole house on this trade. If I get stopped out, take my second loss, my 0.5% is done for the day, and then I got to go on with my day. Got to figure out what happens here. Okay, so now there's an official candle of volume starting to transact in the point of control of Wall Street. Almost. Okay, that wick never got in there. But let's see a reaction if it comes in there. Gold. Gold is bullish, guys. Watch for it. If it closes with volume above, again, flip that zone green. Could be going for new all-time highs. Okay, so we got 30 seconds to go into the close. That was a very strong bullish candle that broke that high and that high, came up there, did not get into that point of control currently, and there is sellers pushing it back down. So if it still closes below the yellow line, the next bar could open black and start coming back down. However, it's a strong bullish candle, so it could be blue and continue to drive, but then I really want to see what will happen in the point of control up here. And my stop loss is just above it. Okay, so open bullish ignited. Quickly, short-lived, they flipped it black, but it's like this small doji candle, which could continue to build. Blue, it's building. So let's see, will it fill that wick and continue to drive into the point of control? However, if there's sellers that can maintain it, keep it down with a lower high, they could potentially flip this back down black candle and push it down. Okay, so there is a flip of a candle. You still see that we have not transacted in that point of control. So there is offers right here by this daily point of interest, 25,500. It's at that psychological level. Now it's going to be a big dogfight between buyers and sellers right here, right below Wall Street's point of control. So reason being, if it comes up and breaks through here, I no longer want to be in this. Why? Because it could break out. It could close above there. That was where I would have to flip it red to green. And then all of a sudden it's breaking out for a new high. So you see, that's my maximum risk right at this point of control, right above it. Now it's actually transacting inside of it right now. Okay, so all of these orders now from Wall Street, if a real seller is here, they should be selling here at a premium level. And it's my job to sit here and see if it's true. If not, then my analysis is wrong. Then I got to step out of the way. And maybe my stop loss is too tight right there. That's how it happened with gold. I got stopped out, then it went down. But that's how I trade. Trade with stops at these points of control. And if I do give it more room to breathe, then I had to have reduced my size. In this situation, I didn't. So that's where I felt comfortable with the stop loss. And 2 more minutes to go. Okay, so there is selling pressure right exactly at 0.5, 50% right at that red line. Okay, but still lots of bullish volume in the candle. So as it came down, it's refueling itself, filling back up to test those. So, you know, if the sellers are there and they push it down, they got to exhaust all of this blue volume and flip the candle back down black, right? So there is an official retest at the point of control. Will it continue to hold or not? Got to watch this candle until the last 90 seconds. So it's right below that 25,500, that psychological area. It's back down to that daily point of interest. It traded right into the point of control of Wall Street. Sellers are there, but still holding bullish volume. So this is a true neckline. Will it be a little higher? And it could have one more punch out of here, tap me out, and then that's it. I'm done with this trade. regardless of what happens after the fact. Okay. And then I got to live with it. I'm not one of those traders that just increases the stop loss, puts it higher and higher and higher, and hopes and prays. I give it more than enough room to breathe. If these sellers are not here at Wall Street, they're not here. I'll verbally let you guys know as soon as I get stopped out here. This rate probably in the close. Closing right at the high. Next candle could be bullish ignited unless there's a significant, no, it's ignited. So it could take out this wick. No, there's a wick there, rejected. I'm still in. They haven't got me. It's got a high probability. It's going to come through there and get me. There is a wick. There's still a wick there. Okay, there. I got out. So that's it, guys. So now you got to watch and see if the volume will close above this zone. I'm out. If it closes above, that could be your retest to continue to buy Nasdaq. If the sellers bring it back below it, you know, that's what you use to see if it will do this or if it will do this. And guys, that's it for me today. You can see I'm not reading the markets correctly today. I got 2 stop outs. I'm done for the day. Got other things to do now. Got to review these 2 trades I took, learn from it. I'll let you guys know if I'm back tomorrow. If you guys join this free Telegram, this is where we post all of the links in here. This is where you'll see upcoming. So later this evening, if I do come back tomorrow, you'll see the time. It'll either be like this time, either a New York session or a post New York. This Telegram channel shows you everything in here. It's pinned at the top of YouTube for you guys. I'm not feeling it today, guys. You can see I'm not reading the markets correctly. So I got to step away. Take my time off, because if I sit here, guys, you know what can happen. I could get mad. I can start revenge trading. I can start upping my my sizing to make these losses back, and I don't want to engage in that. I don't want to. Like I don't want to go through that right before Christmas time. You know what I mean? I'm not ruining my holidays for something stupid like this. I normally trade with 1% of my entire capital every single day. Today I reduced it to 0.5. Those 2 trades were 1/4%. I lost 0.5%. I still have 0.5% if I still want to come back, but I choose not to. So I gave the market 0.5%. It's a loss. They go down as 2 L's in my journal. I got to go back and review this. But it's not detrimental. You know what I mean? I can still enjoy my day today. That's the thing that I want you guys to learn. Losing days can still be, I look at them as a winning day. You know, yes, I didn't win in the markets, but still life is good. You know what I mean? That's how I look at it. Okay. And I'm sorry, guys. I went with the points of control today. Maybe it might hold up after. I don't know, but that's as much as I gave it to breathe. That's more than enough. I really stick to my stop losses, and some trades go to TPs, some trades go to stop loss. It is how it is, guys. But hopefully we'll see each other tomorrow morning. And just pay attention, guys, to your news, your days the markets are opening, what days are they closing early. Some of you guys said Friday this week. Friday, like US is open, but just remember markets might be closing early on Friday. Might be noon. It might be 1 p.m. Okay, so just look at the security you trade and check that out. Make sure you know ahead of time, so you're not caught up on Friday and you're trading, and then all of a sudden you're holding a trade, and now you're holding through the weekend and going into next week and things like that. Okay, but guys, have a wow, gold still respecting this area, coming right back down. So, oh man. Sometimes the markets, they tease you to come back in, but I'm done no matter what. Okay, guys, have a good day today. God bless everyone. If I don't see you guys, have a very Merry Christmas if you guys do celebrate. And for sure, we'll see each other next Monday, but hopefully we'll be back tomorrow. And next Monday, we'll do it again. Okay, guys, have a good day. I'm not having a good day in the markets. I'm having a shitty day myself here, but you guys have a great day. Thank you, guys. Thanks for all of the support, guys. We do appreciate all of you guys. Have a good day, guys.
Recording stopped.
Keep an eye on the Telegram. See later on. If we can do tomorrow, I'll give you guys the link.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.